All right. Good afternoon, everybody. Happy Saturday. Can everyone hear me okay? And thank you guys so much for your patience. Yes, yes, yes. Awesome, guys. Happy Saturday. Thank you so much for being here with me, everybody. I truly, truly appreciate it, and I'm honored to put on my first class. Before we dig in here, guys, where's everyone reporting from? I saw everyone posting before where they're from, but now that I'm here, let's see it. We got Seattle, New Jersey, New York City, Hong Kong. I see my Dallas in there. There we go. Minnesota, Texas, Portland, San Diego. Oh, I saw a Chandler, Arizona. That one's got to win. Second question, guys. What's your favorite stock currently? Just give me one ticker. Roku, SPX, Google. I see a lot of SPX. Let's go. Amazon, Apple, Cat. Hey, we all like SPX, it seems. That's good. But all right, guys, let's get to work here. I appreciate the 10-minute delay. We do have a little bit of tech issues. If anything, during this presentation does mess up at all, let me know, guys, and we'll get that handled. But we should be good to go here. So that being said, guys, grab a drink, sit back, relax, and let's talk about scalping. So today, guys, we're going to talk about my option scalping secrets, my guide to doubling your money in minutes. Let's get right to work. So again, guys, welcome. I'm super honored to be giving my first class. It's a true honor, guys. I've taken so many from Simpler, and to be on the other side of the screen, now finally sharing my strategy, this truly is a dream come true. So very blessed to be here, guys. Let's get to work. So first thing I want to do is introduce the topics that we're going to cover. In this class, you are going to learn a complete day trading system that leverages options for high % returns. You will also learn how to scalp with options and take advantage of these quick explosive moves that truly happen in any market condition. And then finally, guys, you're going to learn how to prep for each trading session, how to find key levels and zones on charts, and how to use all the indicators tied together. Here's a little bit of a class outline. I broke up this class into the few following sections. The first is we're going to do a full indicator introduction and breakdown. We're going to talk about finding inflection points and creating chart zones. We're going to do our daily preparation process and creating your focus list. And then we're going to discuss some risk management and which contracts to select when you're looking to trade. And then finally, we're going to talk about how to tie all of these concepts together. Every great system, each component builds upon itself. So, the indicators, the inflection points, the prep process, the risk management, that's all going to stack on top of each other, guys. And I'm going to show you how to tie that together to create your, trading business. So just to kind of give you guys a little highlight of what each section is going to be about. So the full indicator breakdown, we're going to cover all my favorite indicators. First is going to be the Ichimoku cloud. We're going to talk about the 21 EMA. We're going to focus on the 8 EMA as well. We're going to talk about VWAP, specifically the middle line. And again, I'll explain all this, team, just a quick introduction. And then finally, one of my favorite indicators, point of control, better referred to as POC, P-O-C. In the inflection point in creating chart zone section, we're going to talk about the psychology behind zones. We're going to talk about the time frames that you want to look for to find certain levels. We're going to talk about how to create these zones that you see on the right here. And then we're going to discuss how to, actually trade with them, how to think about it, entries, exits, etc. And then we're going to talk about finally combining the indicators that you learn to go create these zones. Next section, guys, is the preparation process and creating your focus list. This is going to be a breakdown of my personal prep process that I do every single day. We're going to talk about finding and interpreting news that can impact stocks in the overall market. We're going to talk about one of my favorite things, which is called stacking catalysts. You guys are going to like that. And then the final point here is about narrowing your focus list so you can come into each day with, 1 to 5 really good looking setups. We can't watch them all, so I'm going to show you guys how to truly narrow things down. Final section here, guys, is structuring trades, risk management, and contract selection. We're going to dive deep into risk-reward analysis. Every good system, you want low risk, high reward. We're going to talk about stop losses and profit targets. And again, we're going to talk about the contracts that you should consider selecting. And then again, just overall account management and how to approach it. And then finally, guys, that leads to the tying it all together section. In this last section, I'm going to do a complete summary on everything that we've talked about and really drive home how, again, each of these steps builds upon themselves to create the ultimate scalping system. So before we get into it, guys, I just want to make sure that you guys know I am here if you need guidance. You know, the fact that you signed up for my class, I truly, truly appreciate that. So above and beyond being here, I promise to be there for you guys. You can find me on Twitter at FocusChan. I'll be answering any DMs that you guys need, or you can simply just send me a personal email at ChandlerSimplerTrading. But truly, guys, I'm here to help you learn, digest all this material, whether it clicks today or not. I'm here for the long run. So you guys will always be able to reach me. And then finally, guys, all said and done, when we get through this class together, you're going to walk away extremely empowered with a complete options day trading system that you really can begin to implement immediately. So come Monday, if you're comfortable, you'll be good to go. You'll be getting to build a sustainable skill set, guys, that has withstood the test of time. I've traded through the 2018 China trade war sell-off. I've traded through COVID. I've traded through bull markets. Truly, you're going to learn a system, guys, that can withstand the test of time. And again, that you can implement day after day after day. So a quick little pointers here, team, how to get the most out of this class. The biggest thing is focus on absorbing each component of the system. So like I just showed you, there's a few key components and sections that we are going to discuss. And really just focus on the big essence of that section, and it'll start to click. Make sure, guys, that you listen with intent, right? Truly sit back, relax, and absorb this material because it can change your life. And make sure, guys, that you just save your questions for after each section. I personally have been teaching for a handful of years, and I do a really, extreme detail. So I promise that I will probably explain everything, even if you have questions, before we get to the end of the section. And if for some reason I don't, at the end of the section, I will open it up for questions because, again, I want to make sure everyone truly internalizes this skill set. And then finally here, guys, look for those aha moments. And I actually want to start with another question here. How long have you guys been trading? And has anybody day traded before in the past? Arnie, traded for 5 years. Nate, new to the game. Love it. 2 years, 4 months, 22 years. Wow, we got it all, guys. I love it. 8 months, 1 year, 10 years, 25 years. Some of you have been trading longer than I've been alive. That's awesome. So the reason I wanted to ask this, guys, is we're all going to have different, aha moments where something's going to click, something that you might have been missing in your game plan, in your psychology, whatever it is. When you find that aha moment, run with that, guys. And I promise you're going to have a lot of, whoa, aha moments here with me today. So really just sit back, relax, learn, and those aha moments will come naturally. We will be taking, guys, a few 10 to 15-minute breaks throughout this class. We are scheduled for 4 hours here. So we did run a little bit late. So we're going to extend that a little bit. But don't worry, guys, about sitting here for the entire session. It's going to be recorded. You will not miss anything whatsoever. You're going to get this entire slide deck. Don't worry about that, guys. And again, we are going to take a break probably every hour here. So we don't got to sit here and, pace ourselves for a long journey. We'll take some breaks, go get a drink, get some exercise, and then we'll get back to work. So real quick, guys, my experience, just to, set the tone here, I've spent the past few years, in my trading career strictly on mastering day trading. I haven't really messed around with anything else. I've made sure that I picked one path and I committed to it. And that's why I am where I am here, teaching it to you guys. I've tried every indicator in the book. It's funny. I've tried, MACD, RSI, the 5MA, the 10MA, the 15MA. I've tried everything, guys. And I've finally narrowed it down to what I truly believe is the best, what matters, and what works. And everything that I'm going to share today is really built around, the core essence of trading, things that will never really change. So again, I've gone through it all, trying to find what works, and this is my, masterpiece. And I've spent years, guys, not only, mastering it myself, but teaching others this system. And I've created a lot of successful traders. And the fact that you guys have taken the investment in yourselves and with myself, you are next. And I'm super excited to be a part of that journey. So before we dig in here, guys, just want to talk about, a little bit about scalping and why it's so important. The biggest thing is scalping allows us to take advantage of these quick, explosive, high percent return moves that are happening every single day in the market. Again, regardless of what's going on. It could be a choppy day. You might look at a daily chart and think, oh, nothing happened. But in between there, guys, every day, there's a lot of amazing moves that you can capitalize on. And that is what's important about scalping. Where again, if you don't know scalping and you look at a chart, you might ignore it for a few weeks, right? But for us, and as you'll learn, there's so much opportunity, quote unquote, under the surface. So that's a really important, thing here when it comes to scalping. Second point, guys, is scalping can help you survive and even thrive during these choppy, volatile times. So if you've watched the market recently, and let me know in the chat, guys, it's been crazy. Can we all agree on that? We get the big pops, we get the big drops, and you zoom out and we haven't really gone anywhere. It's actually a crazy market. But the great thing, guys, is for scalping, that's where you can actually thrive as opposed to, trying to swing trade, trying to sell spreads. Right? Westy's psycho. This market's psycho. It's funny. But as you'll learn, guys, at the end of this is actually a really fun environment when you learn to scalp. So where most people are fearful and staying out of trouble, we can actually come in here and thrive. That's why I love scalping. Third point, guys, is it can be used to hedge and manage your overall account, or it can be a standalone strategy. So, there's a lot of people in here with a lot of trading experience. You're probably not a day trader, right? You might be a swing trader. You might be an investor. You might be a spread trader. This is a good skill set, guys. And I like to refer to it as, fishing or hunting, where at any point, if you want to go fish and feed yourself, you can. So again, if you're a swing trader, you can use this strategy, guys, to protect yourself, to hedge, to manage your account. So if you have a long swing trade, you can scalp around it and potentially even pay for it by the time, the move is all said and done. So this really is not only a standalone strategy, but an amazing complementary strategy. And then the last section here, guys, scalping allows you to trade the market without having that overnight risk, right? I'm sure, again, with all the madness going on, a lot of us are a little bit hesitant to put on overnight risk. You don't know what the heck you're going to wake up to. Is the market going to be up 1%, down 2%? Is it going to be flat? I personally, guys, have found much peace with this game by going to bed with no risk on the table, not having to be at the screens all day. I show up, I attack the markets, and then I go enjoy life. It truly is a nice way to kind of deal with chaotic markets. In DSI, when I mean spread trader, I mean, like my brother Taylor, he focuses simply on selling, put credit spreads, kind of a slower way to, attack the market. So again, you could play spreads and then scalp around stuff like that. So before we get into things, guys, I want to give a few pointers on scalping, which again, you'll be able to go back and read these, but I want to make sure when I share these, we're going to be explaining this throughout the class. So these are just kind of a few pointers that you can go back and reference. The best time to scalp, guys, in general, is usually the first 2 hours of the day and the last 2 hours of the day. Right, so wherever you are, just the opening bell for the 2 hours, and then the last 2 hours into power hour. The reason for this, guys, is because that's where the most amount of volume occurs. That's where big retail funds are going to be trading. That's where big, firms come in and make their investments for the day, right at open and right at the end of the day. So those generally are, guys, the best time to trade. However, a great setup can unfold at any time, and that's something really important to understand. Just be picky if there's a lack of overall volume. So again, I'm going to break these things down in more detail, guys, but just to give you a sense of when you want to look to trade, the first two and the last two are, the sweet spot. But again, moves can happen at any time. When scalping options, guys, I focus on using the same week contract expirations as they provide the most volatility and the most movement in value. And again, we're going to dig deep into option contracts and how to select them, but that's just a little pointer here. Next few pointers, guys, is first strike selection. I focus on playing slightly OTM, so out of the money, and then slightly at the money contracts. So again, I'll break that down for you, but this means instead of going in the money, I'm just slightly out and a little, close to it. Second point is I focus on percent gains when it comes to this strategy. and I focus on hitting my price targets rather than focus on the dollar gain and the emotions that come along with it. When I first started trading, I'd get in a trade, I'd see the P&L, and I'd get way too excited. Sometimes for the good, sometimes for the bad. But the problem with that, guys, is I actually wasn't following my plans. I wasn't letting things hit my price targets. I was getting caught up on dollars and emotions. So I really want you to kind of understand this point here. Focus on the percent gains, which is the key to this strategy, and then focus on hitting your targets and following your rules. It's easier said than done to control your emotions, but that really is the key. And that leads into our third point here of always respect your rules in your trading plan. And again, guys, harder said than done, but make sure that you do not scalp when it's just super choppy and quiet. A big thing that I'm going to stress throughout this entire webinar is when you're scalping, you want to wait for key inflection points, aka key levels, and you want to wait for key zones before you trade, because this is going to raise your probability and your edge as you're going to learn. Where the problem is, if you don't have that discipline and you just trade in the middle of nowhere, that's when the market's going to, unfortunately, take some advantage of you. So that being said, guys, is everyone ready to dig in? Let me know in the chat and we'll get right to work here. Awesome, let's get it. Give me 1 second, guys. I'm going to turn my fan on. All right, let's dig in here, team. So section 1, we are going to break down a deep dive into each indicator in my system, and we're going to look at some trade examples to help you guys, showcase how to use these indicators. Here are the indicators that we're going to cover. First is the Ichimoku cloud. Second is the 21 EMA, the 8 EMA, the VWAP, and then the point of control. That's all the indicators I use in my system. So let's start with the Ichimoku cloud. It's called the Ichimoku cloud, guys, but just to keep it simple, I'm going to keep calling it the cloud. So the Ichimoku cloud is this little gray, you can see it, cloud that we see here on this chart. The cloud combines multiple points of data to give you a current and a forward projection of support and resistance. So the reason why this is one of my favorite indicators is because it's not a lagging indicator, meaning most indicators, guys, are updating with price. This is an indicator that gives you a forward projection. So when price was right here for the market, we could see this cloud ahead. And you're going to see this unfold in examples, but that's the best thing about it, is it gives you a forward projection in levels to work off of. The cloud, guys, is also used as a gauge of trend, not only on smaller time frames, but larger time frames, as you're going to learn. General rule of thumb here, if price is above the cloud, we're bullish. If you look at this example, guys, and we're above the cloud, all right, at least for intraday, price is bullish. If price is below the cloud, we are technically bearish. Scalping timeframes that I like to use for the cloud, I focus on the 5-minute and the 1-minute for intraday clouds. And then as we're going to learn, for prepping timeframes, I like a daily chart, a 4-hour chart, a 1-hour chart, and a 30-minute chart, which you will see. So there are two main trades that you want to look for when using the Ichimoku cloud. We're going to cover them all. The first is the cloud crossover. This is simply when price breaks either back above the cloud or it breaks below the cloud, signaling a shift in trend and momentum. Because remember, guys, the biggest thing is whether we're looking at on a 1-minute chart or a daily chart, right? We're going to focus on the 1-minute. The trend can change intraday, and these are the shifts in momentum that we want to take advantage of. So if we look at this SPX example, we started the day below the cloud, right? We got the fat cloud here, price is trading underneath it. That means we're starting bearish. However, the first trade that we're going to cover is when price crosses back above the cloud. So again, this is when price, guys, either breaks back above or below. In this example, we're going to talk about crossing above. That's a bullish shift in momentum. So if, again, we look at SPX here, it opened below the 1-minute cloud. Once it pops strong and breaks back above that cloud, this is our bullish crossover trade. That is the inflection point of momentum for intraday shifting. So let me clear this up real quick. So if you look here, guys, right, we see the cloud into pre-market. It's big. We know it's going to be here. So we open right underneath it. I'm going to teach you guys some pattern recognition where we can see this slight little downtrend starting to form. And then when it finds its feet, right, we hold here 3 times, and then we finally start to make a push right up towards that cloud. Once we get that breakthrough, guys, that's where the momentum for the day can completely shift. So again, we gap down, we start kind of bearish here, and then we get that breakout through the cloud, and it just starts a massive trend for the day. So that cloud is that inflection point here, team. And as you can see, it's continuing to give a forward projection. So let's keep moving here to give a few examples. So if we look at the left screen, guys, that's the example that we covered where it gaps down, we wait, and then it breaks right through it. That becomes our scalping opportunity. The second chart here, guys, as you can see, it started in the cloud, started to drop, worked its way up to the cloud, and it couldn't get back above it until, boom, then it breaks through the cloud. So again, we want to focus on trading on the other side of it. When we break inside of it, it has to get on the other side. So we tried here, let me pull up my pen. We tried right here to break out of it and failed. So we keep going lower and we start to establish an uptrend, right? We create higher lows and then we get the cloud crossover. And this is what leads, guys, to that sharp shift in momentum, and then the trend continues for the day. So that's the cloud crossover here. Ooh. I showed you guys some bullish ones. It also works on the flip side. So 2 ways, guys, to look at clouds, and we'll look at the right chart here to start. Whenever it breaks through it, the first thing is going to be falling to the other side. So if we look at Tesla, pre-market here, they broke above 1 minute cloud, signaling a potential very bullish start. Very quickly, guys, they just rallied nonstop until they started to top out here. And then they give a first test at that 1 minute cloud. So when we break through it here, team, you can see just how quick that momentum shifted and dropped us down to the bottom of 1 minute cloud. So there's always a top of the cloud and a bottom of the cloud. And when we start to break through it, that's that shift in momentum. And now if it falls on the other side of it, that's when we're getting an official cloud crossover and we're getting that bearish momentum for the day. So you can see here, beautiful push on Tesla, and then it completely failed. And then it broke back through it and continued this downside journey. So again, guys, these shifts through the cloud are an intraday change of momentum. And if we look at the left example of NVIDIA, NVIDIA, guys, starts the day above the cloud, right? Does this messy little thing trying to get going, and then eventually falls below it, and then can't trade above it, and then starts to do a crazy reversal here. Almost 20 points from the high, it drops. After it breaks that cloud, it continues to drop. So again, I want you to think of these, team, as these are the inflection points intraday where we can see a shift in momentum that we can go capitalize on. Let's keep moving here. So I showed you guys the crossovers. The second way to visualize and use a cloud is a cloud bounce or a cloud fade, right? There's always a bullish and a bearish example. So we're going to look at, guys, both of those. This is when price either nears a bullish cloud and bounces, or we near a bearish cloud and we begin to fade. If we take a look at SPX here, guys, and here's a really good note to write down. Whenever the market gaps down, so you can see we gap down pretty hard here. 9 out of 10 times when the market gaps down, it's going to make a push towards 1 minute cloud before it makes up its mind. This is just something magical that I've discovered over the years. So again, we gap down hard. We closed here. We gap down. We got a very bearish cloud. We're starting the day bearish. However, it just goes sideways here, guys, for 30 minutes. But all it was waiting to do was get right near that cloud, and then it starts to fade extremely hard. After it fades really hard, guys, just like here, when it gaps down, it's going to make a journey back to that cloud. And when it gets back to it, then it's going to start its next journey. So if you can imagine it, it's kind of like a magnet that restarts the move, where you gap down away from it. So we slowly migrate back. And then boom, that's where we want to fade this for a huge drop. And the further we get away from it, guys, we want to be ready for it to bounce back and retest the cloud. So again, this would be one trade where you fade it. You would wait till it comes all the way back. And then if it doesn't break on the other side of it, it's going to get that push and momentum. So really take in here, guys, where the momentum happens. And that's at the clouds, right? Nothing happening, nothing happening, nothing happening. We get near that cloud, boom, falls off a cliff, right? Bases, 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 refuses to go lower. Probably needs to go back to 1 minute cloud. So it makes that little migration, sits there for another 15 minutes, and then starts that huge shift in momentum. So this is an example, guys, of a cloud fade, where again, when it starts to get near it, be ready for that shift and change of momentum, dropping it back down hard. So that was the fade, guys. Here is an example of bounces. So again, remember the general rule of thumb with clouds. If price is above it, we're bullish. If price is below it, we are bearish. So in the last example, guys, we're below it. So we're looking to fade the cloud every time we get near it until it shifts for the day, right? If it can't break back above it, the momentum still remains bearish. Same thing here, guys, with a bullish 1 minute cloud. So let's start with our SPX example on the left. And this was the example that I showed for the crossover, where we open, we get a nice little downside wedge, and then we start to explode and break that cloud. So remember, team, this is the shift in momentum for the day, right? This is where we want to kind of tweak our bias, where it's like, okay, we're under the 1 minute cloud. If we, migrated near it, we could have faded it. Instead, it broke right through it here, which again, guys, signals the shift of momentum for the day and for right now. And as you can see, when it ripped through it, it goes on a massive run. And what's great about this cloud, guys, is while it's here, we can see this very thick cloud starting to follow it. So at that point, when price starts to near it again, we want to look for a cloud bounce or a breakdown like I had showed you. So again, guys, something is always going to happen at the cloud. It's a big inflection point, combining a few indicators, combining volume. It really combines a lot of key critical components. So when we get near it, expect something. But the biggest thing to remember, guys, with trading is never expect something too much. I like to call it if this, then that. Meaning, if we get near 1 minute cloud and we start to hold, it could be a great bounce, which is exactly what happened. But we don't want to rush into it. We want price to prove itself, because it could also break through that cloud and we start to short it back down. So just remember, guys, when you get to cloud, it's time for price to make a decision. That's how you want to mentally think about it and be ready to attack it. And to keep drilling in pattern recognition here, guys, take a look what happened. We get the big push, and then we start to slightly downtrend until what happens, right? We downtrend until we hit that cloud. So it's inflection point time, baby, and we pop and rip. So again, guys, we crossed over it, giving us the bullish signal for the rest of the day, right? You attack this whole move, and then we wait, boom, beautiful bounce, and we're continuing another leg for the day. So if we look at Apple here, guys, same thing. They opened right at 1 minute cloud and popped extremely hard and continued their journey until they broke down. But when they broke down here, guys, you can see we have some nice intraday support that lines up right with that cloud. And so again, every stock, guys, is going to take a little bit of a break. So we get the big pop. It's going to take a break. When it takes a break, it's usually going to go to the 1 minute cloud. to decide its next move. Beautiful bounce here, guys, and continues its trend for hours. Now, again, if it broke below it, we could short Apple. But if you hit the opening drive or you're just waiting for a good entry, the cloud bounce, guys, is your best friend. Because remember, as long as it holds, the trend is intact. And to touch on something real quick here, guys, the size of the cloud matters. Where if we look at the left example, the cloud wasn't too big, right? See how it wasn't that thick? That means it's not the best resistance, meaning we can rip right through it, just like we did. However, right here, we had a thick cloud showing you it's going to be good support, and we held. So just like Apple, guys, we started, and it started to get bigger. It started to show us that we have bigger support coming, right? Look how thin it was here, and it just keeps getting bigger. So when we finally reach it, we have this entire cloud, guys, to see if it holds. So consider the size, guys, to be, a compass on how big the support level is. Where if it's a very thin little cloud, there's not much going into it. Where if it's a big cloud, you can expect either a big bounce or a big breakdown. So in this example here, if Apple broke below this cloud, we would head right to the bottom of it. And then maybe we can hold and get back out. Or if it breaks through it and then breaks that big cloud, we're going to see a true shift in momentum for the day. And yes, size does matter with clouds. So let's see, guys. Oh, okay. We covered, so just a few more cloud fades here, guys. And then I'll show you some examples of trades. So again, this is the SPX one where we open gap down. We wait, and then boom, you fade it. Pops back to the cloud. It's going to have to make a decision. Do we break through it and trend, or do we continue our downtrend? That's what happened. So we take a look at the right chart here, team, of Facebook. This is a name that was trading above the cloud at 1230. And then it just started to top out here. It couldn't trade any higher. And then what happens here, team? It breaks that cloud and we get the inflection point, right? We get that shift in momentum. And as I've taught you guys, every stock is going to drop hard. So you get that initial cloud break for the hard drop. And then it's going to find its way back towards that cloud and then make up its mind again. So is this making sense here, guys? And I'll, again, save your questions. I will make sure we do all the questions in the cloud at the end here. But awesome, guys. Glad you're liking this. So let's just look at a few trade examples that, I've taken recently. Well, not recently, this year with the, with the cloud, just to give you guys a representation. So here's an example on SPX, right? We open, guys, right at the cloud. We take a quick little dip. So again, that could have been the change of trend for the day. However, guys, it quickly held, right? So this is just a little morning drop. And so right when we break back through that inflection point in that cloud, again, that's our signal here, guys, for a change of trend, at least for the time being. So I grabbed SPX 3,900 calls at $1 a contract. So that's about $100 of risk. And in just 1, 2, 3 candles, guys, made 80% on my money and sold those at 1.8. So about $80 a contract. And again, it's more about, guys, the percent return. Being able to almost double your money there on a simple shift in momentum right at a key inflection point. Right? We go below it. We quickly get back. That's strong. And then boom, she's gone. So that's a great example here, guys, on SPX. Let's look at another one here on ES and SPX. So this is an example, guys, of a 5-minute cloud. As I mentioned, I really like to use for intraday both the 1-minute and the 5-minute as really nice references. So in this example, guys, I was watching the ES 5-minute cloud, really nice support. And like I taught you, when we gap down, we're usually going to pop a little bit until we get to that cloud. Same thing happens here, team, when we gap up. So if you take a look here in the 5-minute cloud on SPX and ES, we gapped up, guys, nicely, right? We were running into open. Gave us a nice pre-market high. Beautiful little drop pre-market. And again, guys, look, we can see this cloud. We know it's going to be there. We know it's going to be nice and thick. So when we're game planning, we're looking for price to reach there, give us a little dip buying to open for that explosion higher. So that's exactly what happened here on SPX. We open, we hold that 5-minute cloud. You can see, guys, we hold it, we hold it, we hold it. So many chances to get a tight entry here, risking right back below. This is the key, guys, where we want that tight entry at that cloud with tight risk, capitalizing on all of this reward up to that key zone, which we're going to talk about how to draw. So again here, team, we gap up. So I'm expecting if it does go lower, if it goes lower, if it holds the cloud, that's my entry. So I grabbed SPX 3950 calls here, guys, at about 80 cents a contract, and they quickly exploded off of that cloud to my key zone for 113% return on investment. So again, guys, it's a very simple but powerful indicator where, again, we had a fit cloud. We're already starting bullish. We're just waiting for a pullback. We're waiting for a precise entry at inflection points. So this is what I mean by get that entry, guys, at an inflection point. We don't want to trade in the middle here. We don't want to trade in the middle here. We want to get an entry at a level where we can expect a move, where then we can come in and capitalize on options. So in this example, guys, this is a 5-minute chart. So I let this one ride because, again, I didn't get stopped out. My target was above, and this resulted in 113% return in about 20 minutes on SPX. Moving on. So here's an important concept, guys. I showed you, how to scalp with it, how to, use the little time frames. But this can also be applied, guys, on the bigger time frames. And there's a lot of, beautiful magic to it. And what we're going to dive into now, guys, is called cloud sequences. So the Ichimoku cloud, it works in a sequence effect if you start to combine bigger time frames. And bear with me here, it's going to make complete sense in a minute. So for example, if a strong stock starts to get tired, it's going to slowly, guys, break down each cloud. So in this example, we had ES trending above its hourly cloud for weeks, right? Look here, guys, this is 329 to 419. We just keep trending above the cloud. Every time we get near the cloud, it leads to another leg. We get near the cloud, another leg, another leg, another leg. So again, guys, when it comes to using the cloud intraday, we're taking advantage of those quick shifts in momentum. When you zoom out a bit, you can really get a sense on the market, on any individual name. How's the current, trend on a bigger picture time frame? So if we see here, guys, on ES, as long as we're above this hourly cloud, this show goes on. And we're just going to keep rallying higher. And every time we get in that cloud, it's going to be a good entry, and it's going to be a good inflection point, or at least just a good compass of whether we should generally stay bullish or generally stay bearish. And now here's where it gets magical, guys. Again, it's always if this, then that. If it holds the cloud, the show continues. But what happens, guys, if it doesn't hold the cloud? That's where the sequences start to come into effect. So let's dig into that. So if we note, guys, again on ES here to break down this example, it's been a very strong uptrend, trending above the hourly cloud for weeks on end. Right? Every bounce is met with buyers. Watch what happens when we finally break below it. So you can see here, guys, we trade, and then we finally break through it, and we hold that little bottom base. That night, we pop, and we can't get back outside of it. So for weeks, we have been bouncing at the top of the cloud. For the first time, we fell inside of the cloud and then couldn't get out. So as soon as we break below it, guys, so this is the first time in a month that price is traded below hourly cloud. This leads into this sequence, guys. With clouds, the hourly is going to be that first little compass, but beneath it is going to be a big 4-hour cloud as support. So this is where the sequence comes into effect, where if it breaks the hourly cloud, it's now going to go to the 4-hour cloud. So if you look to the right here, this is where we broke hourly cloud. And if you look, we had a big 4-hour cloud below that we haven't touched in a long time. because we've been trading above the hourly. So again, this is the sequence here, team, where as soon as we break the lower time frame, we're going to head to the bigger time frame, which next to my system is that 4 hour. So again, we break here on the hourly. And where do we go to? Right to the 4 hour, guys. And then the journey continues higher. So let me keep showing you this example. So if we look here at the daily cloud, guys, right? If it breaks the 4 hour cloud, it's going to start to go to the daily cloud. And if you followed me in the options room, for the past few months here, I've been screaming about these dip buys at daily cloud. You guys want to visualize it and think about it like this. We're not going to reach the bigger picture clouds often, right? You don't really reach the daily cloud often. You don't really reach the 4 hour cloud often, either trend. So again, when you're holding that hourly cloud and finally break it, you want to pay attention to the next cloud in line, right? In the sequence, like who's the next one to support us? That's the 4 hour. If it breaks the 4 hour, guys, it can go to the daily cloud, which again, the bigger the time frame, the bigger and stronger the cloud's going to be. So if we look here, guys, at ES, recently we've gone on some big pushes on the market, and they've had these panic drops. Where I didn't panic was I understood it was a good dip buy as long as we held daily cloud. And then boom, right, guys? We get a big choppy grind. Everyone's scared of a bear market. Chan just wants it to go to daily cloud and bounce. And then boom, we're crushing it for weeks. Again, guys, another pullback here. Everyone's getting ready to short the market. We're just waiting for a dip out of daily cloud. And then boom, it runs for weeks on weeks on weeks. So you'll get comfortable, guys, with the cloud sequence as you flip through charts, but really visualize it like that, where we're holding the hourly for weeks. We finally break the hourly, we can go to the 4 hour. If the 4 hour holds, the trend's back. If for some reason we break the 4 hour, we're going to go to the daily. So remember, guys, these are all different types of trends. There's bigger picture trends, and then there's intraday trends. So you truly can combine both of these clouds to get a sense of what's going on here. So let me read through these bullet points here, guys, because we're on now the summary and tips of the cloud. The cloud, guys, is so powerful because it reveals true inflection points. So remember, our job as day traders is to find and trade around inflection points where big buyers and big sellers are going to show up. And it also reveals, guys, the true trend on all time frames, where again, everyone's thinking this is the true rollover here in the market. Maybe, again, for me, guys, and day traders, it's just if this, then that. If it breaks below daily cloud, yeah, we're probably screwed. But it keeps bouncing. So the show goes on. This can happen on the 1 minute, and it can happen on the daily. I hope that makes sense. The cloud, guys, can be used on smaller time frames, as you've learned, and also on the bigger time frames, like a daily chart. And just a quick pointer here for intraday, I like to keep extended hours on. So if we just go back real quick. Look here, guys, in that hourly cloud, I have extended hours on for the 1 minute. Any intraday chart, I keep extended hours on. If you don't, it's going to skew and make your cloud look much different. So make sure to follow my system. You just keep after hours on. And again, don't question it. Just look how accurate it works with that data. So use these clouds, team, for scalping at precise entries that offer that amazing risk reward. And again, you can make swing trades here. You can just decide to scalp for weeks because we're bouncing off the daily chart. And as I've shown you, all the intraday levels that happen. Trend remains intact as long as price is above or below their clouds. And again, trend, guys, depends the time frame. On a bigger picture trend, as long as we're above daily cloud, the show goes on. And this works, guys, on the index. This works on any name. Reference bigger picture clouds for prep. So again, with the overall market here, we don't want to be bearish as we near that cloud. We want to use this for our preparation to understand this could be just an amazing dip buy. But we're also prepared if it does break below it. So those bigger picture timeframes can really help you prep. And then use the 1 minute and the 5 minute for the day-to-day execution and those shifts in the intraday and finding those intraday levels, trend, etc. So that concludes, guys, the breakdown of the cloud. I hope that made sense, and I will open it up here for a few questions on the cloud. Lorna, two common questions. Where do you place your stop on the other side of the cloud, and when to use the 5-minute versus the 1-minute? Great questions, guys. So let me just flip back up here. So generally, team, let's just look at this example here. My stop loss would be right below that cloud top. Because we got to remember this, guys. If it breaks cloud top, it's going to go to cloud bottom usually. And now it can be a bounce here, and we can work our way back. However, no need to sit through this, because if it's strong, it should hold that cloud top. Where if it is breaking the top and heading to the bottom, that's our first little shift in momentum. Where again, it might hold here, but this is a bad sign. And then this is what's really going to, prove itself. So generally, guys, I always put my stop, right at that cloud top. So if we just go back at a few examples. So for this one, guys, right, when it breaks back through it, I would risk right back below it because it's such a small cloud, right? So if we get an entry here, I'm simply risking if it falls back below. So I'd give it time to kind of hold here and try to find its feet. It happened to just rip right through it, and the show goes on. So if you have a small cloud, guys, and you're playing through it, you can risk back below it. Where again, if we go back to that last example, and you have a bigger cloud, you want to focus on the top and the support. Because again, it's bigger and thicker, so it technically shouldn't fall through it. Where if it does fall through it, guys, I would cut that trade and short it down to the bottom, and then look for it to break it again. So let me just get a few more examples here to drive that home. So for the clouds, guys, for example, on the flip side, if you're looking to short this, right, short this fade, if it pops, guys, right through it, so through the inside, I would get out. Because again, the first side of the cloud is going to signal that potential trend change. So if it starts to break through it here, guys, depending how big the cloud is, you don't want to wait for it to go see what happens, because you're now, losing lots of money, where it can pop back through here, fail, and then you have another trade. So kind of like right here, guys, where it pushed through it, right? You don't really have an entry yet because it just goes sideways. But as soon as it starts to fall, I would then risk back on the other side of the cloud. So I kind of have all this little room for it to then work itself out. So let me see, guys. These questions getting answered. Let me scroll up. Give me 1 second, guys. Getting lost in the chat here. Where are we? And yeah, guys, don't worry about the cloud, parameters or anything like that. You're going to be given this exact looking cloud. You're going to have all the parameters, and I'm more than happy to explain them. HP, do I use a hard stop loss or a mental stop loss? It's mental, my friend. So again, it's just, see how it reacts at that cloud. If you took this here early and it was just kind of sitting in there, again, I would give it a little bit of time, but just be careful if it starts to, show signs of ripping through it. You always want to be ready, guys, to take action at those clouds. Emmanuel, on the left chart of page 24, let's go to 24, my friend. The red line in the cloud is above the green. Is this typically a bearish cloud? What does this mean? Awesome question, Emmanuel. So yeah, guys, the red and the green line are technically, signaling the forward projection of the cloud. So if price is below the cloud and, red is on top, that's continuing to give you a bearish projection of what could happen next. So if you actually look here, guys, pre-market, see how the cloud twisted and green went below? That means we are now getting that shift in projection that this is going to stay bearish. So until that cloud twists and we trade above it, that's how you can technically, consider and think about this. So just like here, guys, see how we are green, 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 and then we start to break it? The forward projection on the cloud is also twisting, where now we have, forward projected resistance. So I wouldn't worry, guys, too much about, the color, just more so, is price above it, and then is the forward projection, bullish or bearish. I hope that makes sense. Or again, guys, right here in this example, we were holding nicely and then we're back below it. And the cloud starts to shift and now we're in the bearish territory. Martin, is a fade and a bounce the same basic thing in opposite direction? Yeah, Martin. So again, right, guys, when you fade the cloud, you wait, and then short it. We're talking about a bounce here. Right, you wait, and then boom, you get the little bounce off of it. Definite, maybe. To what extent do you incorporate volume when entering and exiting based on the cloud? So absolutely, guys, you always want to confirm, if there's good volume, but just pay attention to exactly what happens at that cloud. Because again, guys, these are inflection points. So you can see right here on Apple, when it hit it, we had a nice spike in volume. And then off to the races. Craig, is your stop just watching the chart, or do you set an alarm or enter a trailing stop? So yeah, I set alerts, but I pretty much just watch the chart. I don't manually set the stop loss as an order, because sometimes with options, guys, they can just skip your order depending the spread. So I like to just manually be ready to go. Because again, guys, these are short trades, so you want to have as much control as possible. Milo, after hours, I have the Squeeze Pro. John says to keep after hours off. Yeah, guys, again, this is not the Squeeze. So with the cloud and the system I've built, I keep after hours on, and it's worked perfect for years. So if it ain't broke, don't fix it. You can look around, guys, with it off, but again, I wouldn't change anything here. DPS, great question. How do you know if it will break above or below the cloud, and how to prepare for calls versus puts? So that's the thing, my friend, is we don't know. And the thing I want to drive into, you guys, is it's always if this, then that. The only thing we can use, guys, is just context. So again, with these two examples here, we had extreme shifts. So I do expect when we get to that cloud for it first to be a bounce. And we always want to wait and see. So with this SPX example on the left, it's downtrending, guys. So you don't have to buy it when it hits the cloud. But when it hits the cloud and starts to rip, that's where you want to be like, okay, this is a cloud bounce. I'm going to take advantage of it. Then it pops, flags again, and then boom, you get another little scalp. So the cloud, guys, is a place to be ready to, one, see what happens, or two, take action. Let's see here, guys. I'll make sure I answer all questions here. Deb, how often or how long does it trade in the cloud when you have a larger cloud? It really depends, Deb. There's no rule or something that I've seen. It just truly depends, the size of the cloud, how quick it's moving, etc. Sometimes it can just get stuck in it. But again, guys, at the cloud, it's going to do something. It's going to have that inflection point. It's going to pop. It's going to drop. It's going to do something. That's what I love about it. Let's see here, guys. What's your exit? We'll talk about that, team. Right, this whole system's going to build upon itself. DSI, do you have a minimum no trade wait time when the market first opens to let the market sort out? I like to at least wait 1 or 2 minutes. There's really no rush, guys, to get in at bell. The more information we have, the better. So for example, with clouds here, when SPX opens, just wait. And you'll start to see, the patterns develop. You'll start to see it break that pattern. We can pay attention to what happens at cloud. So it's really just slowly collecting information to make better decisions. So just seeing some questions, guys, that aren't, they're related to the cloud, but a little off topic. So I'm not ignoring you, but I just promise those will slowly piece together, like, how much to buy, where to lock, etc. Sonar, is tape used to form the cloud? No, sir. Gregory, great question. So understand the minutes, but how do you select the bigger time frames? So this is a sequence, guys, that I've developed. You want to watch the daily cloud, right? The daily cloud is huge. I really like the 4-hour cloud. It's just another really big support level. And then I personally just focus on the hourly cloud, the 30-minute cloud, and the 5 and the 1. So you will see, guys, the cloud on multiple time frames, obviously, but you want to make sure that you just stick with a few, not to confuse yourself. So again, team, I'm sharing my system, the clouds that I use, the clouds that have worked over and over. So again, I wouldn't, go change them, but you can, back test it, look at other time frames and see where it might have worked and maybe add that to your repertoire. But that sequence of clouds will work the best. And yeah, guys, if I miss any questions, feel free to email me, etc. And let me talk real quick about the 1 minute and the 5 minute cloud. So with the 1 minute and 5 minute cloud, the reason I like to reference both is you get, a double little sense of intraday. So as you guys will see as you use this, the 1 minute can be fast and the 5 minute can kind of be a bigger picture of what's going on for the day. So again, the bigger we zoom out, guys, the more the cloud can tell us. And that's why I really like the combination of a 1 minute and a 5 minute. If you want to watch both, you'll get a sense of, true support levels where it can break the 1 minute cloud and then go bounce at the 5 minute cloud. And then it's going to get back above the 1 and the trend's going to continue for the day. So really play around, guys, with just the sequence and using them. I promise it'll all click. It makes sense. And yeah, guys, don't worry about setting it up. When you pull up the Ichimoku cloud, and just to show you guys Thinkorswim real quick here, if you put on the cloud, it's going to look like this. Right? Looks ugly, looks complicated, looks sophisticated. What you guys are going to get is not only my simplified version of the cloud, but the simplified way to use it. So again, guys, focus on really just digesting the things that I'm sharing. You'll be given everything. And I'm seeing some questions, guys. Yep, you can use the cloud on everything: futures, indexes, individual stocks. Works on all of them. Altcoins, anything can. Tim, my preference is the 1 minute. So again, you can reference 5, but hope that makes sense. So yeah, guys, I'm gonna move on here. And again, if you have more questions, I will get to them. But for sake of time, let's keep moving here. So next section, guys, key moving averages. And Lorna, this is a quick section. I think actually, yeah, we can save this, guys. We'll take a little break. We'll take a 10-minute break, 15-minute break. We will and then we'll keep digging into indicators here. So let me just drop a quick note. Let me know, guys. You liking this so far? Hope it makes sense. Awesome. You guys are great. So, all right, team, we will take a 10-minute break here. So I'm on Eastern time, so 2:20. We'll be back. And I'll just keep a little note here for reference. Go get some coffee, guys. Get some water. All right, team. Hopefully everyone enjoyed their break. Everyone good to go? I'll wait another few seconds here, but I'm excited to get back to the material. Hope you guys enjoyed the cloud. I know it was a lot, but one of the most powerful tools for day trading. Awesome. Good to go, guys? Let's get it. Give me 1 second. We're on cloud 9. Love it. But all right, team. So we just, excuse me, we just covered the cloud. We're going to move on to the next section here. And that is my key moving averages and a VWAP introduction. So I personally use a combination of 2 key moving averages, which are the 8 exponential moving average and the 21 exponential moving average. I pair these 2 moving averages, guys, with the middle line of VWAP, which stands for volume weighted average price, just a standard indicator. I use this trio together, generally on a 5-minute chart and especially the 1-minute chart. All 3 of these tools act as support and resistance. They offer great entries and exits, and they can tell you a lot about the current trend. Let's dig right into it. So if we look here, team, these are the moving averages. If we just look at the chart on the right here, the teal line that you see on my charts, and this is what you'll always see, whether I'm in the options room or the live trading. On my charts, guys, the teal is the 8 EMA. The red is the 21 EMA. And then anytime you see a white dotted line, that is that middle line VWAP. So let's break each of them down and how to really think about them. The first is the 8 EMA, which is obviously the shortest time frame moving average, the 8 period, and it's also the fastest moving average. I really like to use this one for gauging trend during explosive moves. And again, we're going to cover all of this. The 8, guys, is also great for quick dip buys and tight exits. Because again, it's that fastest moving average that travels with price the most. So you can see, VWAP barely moves here. The 21 EMA, it slowly works its way there. But the 8 is the fastest in what's going to travel with price and give us, the best and quickest, gauge. The 21 EMA, it is a bit slower. As you can see here, guys, it tries to catch up with the 8. So it is a bit slower, but it supports a bigger trend. Because again, think of these as the 8's the fastest. So, we're going to go above it and below it a few times. The 21 is really a, secondary level where it's really good support and supports that bigger trend. Once a name or a stock or an index breaks the 8 EMA, it usually drops to the next one in line, which is the 21 EMA. So as we're going to learn, all 3 of these kind of work in a sequence. So again, 8's the fastest, 21's right below it, and then finally we have VWAP, the volume weighted average price. And this is by far the slowest. It's not technically a moving average, but I do combine it with them. VWAP, guys, will offer around 1 to 2 entries or retests a day. So it really is a better gauge of trend. So these are the 3. Let's dig into them. So to show you guys what it looks like, an example of them, here's a trade on Google I took not too long ago. And now that we've learned about the cloud, we can talk about that as well. So we had a little good pop here to start on Google. And then we just slowly started to drift back down towards that cloud. We did slip it for a second, but then quickly regained it. So overall, I had a bullish sentiment on Google. I was just waiting for a precise entry. Excuse me. You can see here, team, we got back to that cloud. We started to migrate back through VWAP. So as I mentioned, we'll start with looking at VWAP. VWAP is that white dotted line. And this usually is only going to be in play a few times a day. And what it determines, guys, is when we're below VWAP, we're usually bearish. And whenever we can cross back above VWAP, that's a really good change of trend. So if we look here, we held that cloud. We started to work back out of it. And we ended up breaking VWAP and then started to base at all 4 of my inflection points. So not only do we have the cloud top there, but we have VWAP as support, 21 EMA right below, and then the 8 EMA ready to do its thing. So when I recognize this reversal here, guys, and this break and beautiful hold, as soon as we started to ramp off the 8 EMA, I bought Google 2,300 calls at about 2.3 a contract. So about $230 of risk per contract. And the key here, guys, is again, using these inflection points, not only as support and a trend gauge. All right, so right here, we're a little bearish. We hold, we break back above. Now I'm ready to attack to the upside. So as soon as it starts to get going here, guys, I get that entry. And the key with the 8 is, again, it's the fastest moving average. So I want price to stay above that 8 as we're making this fast move. So we stay above it, we take a little dip near it, and then we continue our pop right to our target here for about 150% return. Bought them at 2.3, sold them at 5.7, all by simply just waiting for that inflection point and then riding those key moving averages. And as I mentioned, team, when it breaks below the 8, that's usually when the quick explosive move is done. Now it can keep going if it holds the 21, but if we look here on Google, a little sloppy. It started to top out at that 8, started to trade below it and reject, try to get back above, and it ended up just chopping all day. So we really want to take advantage of that exact inflection point using all these moving averages and then riding that fast 8 all the way to our target here. So again, guys, the way that you can visualize the 8 is it should give these little dips towards it and then continue. It's going to be that fastest move. So I hope that makes sense. Let's keep moving here. And yes, this is just middle line VWAP, no standard deviation above or below. So here's another example, guys, on Jumia, right? If we take a look at Jumia, and we're going to learn zones in a minute, but we ran up to a nice key level here and rejected. So at that point, I'm still waiting for a specific entry. We get the drop back down here to 1 minute cloud, and we start to hold. This personally, guys, was a really good entry. Now remember, starting to recognize psychological patterns in price. We have a slight downtrend here. We're holding support. Wait for the inflection point. So we get that pop at the cloud and we start to pop. So as you've learned, guys, this is a great entry. I personally missed this one, but it is a great example of using that 8 EMA, where again, it's going to be that fastest little trend where when it chops, 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 and then starts to actually move, that's when we have a potential fast trend to take advantage of. And again, if you miss an entry, guys, you're going to get those little dips to the 8 for another fast entry. So again, on Jumia here, we have a little wedge forming. We wait for that inflection point at the cloud. I happened to miss this entry. So what I waited for here, team, was a retest of the 8. So we run, we run, we run. We pull back to the 8 here. That's where I got my entry. Give it a minute to hold. Nice bullish breakout. Grabbed calls here at 2.7. And I held it as long as we continued to hold that 8 EMA until I eventually got up towards my target here and locked for about a 41% return. You can see, guys, as soon as it breaks that 8, it retests the 21, and now it's trying to do its thing. But I want to ride that 8 as kind of the quickest little trend gauge. And if you look, guys, VWAP was not even in this example. So again, VWAP's only going to be there 1 or 2 times, but these two are really going to be your best friend, combining it with that nice little cloud here. So that's a good Jumia example. So little summary and tips here, guys, in these moving averages. Whenever a stock breaks above or below VWAP, that could be a very good change of trend for the day, often like when it breaks above a cloud. Not going to happen too often. So if we look here on this Google example, we were kind of messing around at the beginning of the day, just chopping around 1 minute cloud. We weren't going below it. We started to create higher, oh, wrong tool, hold on. Here we go. We started to create higher lows, which are a very key critical pattern. And notice how we were just rejecting VWAP here, team. So again, VWAP's only going to be in play a few times, but it gives us a really good compass where when it finally breaks through VWAP here, it now starts the upside journey. So not only do we hold our 1 minute cloud, giving us a sense of a bullish trend for the day, but then we finally broke these little highs and broke through VWAP. And that's where all the other moving averages started to play, right? We ride the 8 here. We keep riding the 8 until we, eventually near the 21, and we keep holding it. We ride, we ride, we ride. We break the 8, but we hold the 21. And we get back above the 8, and the show keeps going here, guys. And now where this is important is combine these tools together, team, where when it finally breaks below all of them, like it did right here, guess what? We got the cloud next, and it bounced at the cloud, got back above the moving averages, and kept grinding until it finally again broke below them and then broke below the cloud. And now we're starting the trend in the other direction. So I hope that makes sense here, guys. Again, we break VWAP, we hold a bullish cloud, and as long as we grind these two moving averages, the trend is going to stay intact. Once we break it, we see what comes next, which in my system is the cloud. We got a nice cloud bounce, we're back above the trend, and we keep grinding. We finally top out, and we break below everything. The move is over. So if a strong weak name retests VWAP, it's often a great dip buy as well. So again, in this example, we just kind of broke through it, but what can happen is we pop, the day starting on it, and then we retest it and hold. So just consider it a nice support level. You're usually going to get strong morning drives that pop hard and then go and retest VWAP and then continue for the day. That's one of my favorite little playbook trades. And then where are we? My bad, guys. The final point here, the 21 and the 8 will offer many more opportunities per day, as you've hopefully seen. You get this one little push here at VWAP, but look at all these little entries you can take with these tight little risk rewards. On a trending stock, guys, these can be used again for just really good dip buys and re-entries. So if you played this breakout, you can lock it up, let it go, get another dip buy, keep grinding it higher. So the key, team, is combine these moving averages and VWAP with the cloud that we learned, where again, if a bullish stock breaks below these moving averages, the next support is going to be that cloud. If price holds, as I've shown you, the cloud, and gets back above those moving averages, the show goes on, just like we saw in that Google example. These tools, guys, be very careful with them because they're best used during clean trending price action. If we're choppy and if, all the moving averages are just clustered and stuck together, ignore them. All right, so if we go back and look at a few examples here. When it's like this, guys, ignore it until they start to actually trend and point, up or down. That's when they will be tools that are effective. We're just chopping in the middle of nowhere and the moving averages aren't moving either. Be very patient, very, very patient. So just a few more examples here to drive it home. Let me get my pen. So Google, right? We're trending, we're trending, we're trending. We break the 8. We try to hold the 21 and we break VWAP. Now, guys, we reject VWAP and we continue this trend lower. We break the 8. So just like on the upside, if you break the 8, the next is the 21. So it goes to the 21 and then gets rejected and it keeps going to the downside. So you guys will get comfortable with, following these big 3 together, but they really offer a lot of, great entries and great, trend gauge. So if you look at the second example here, we got all of them combined. We had a beautiful hold here, nice higher low. So we had a low here and then a higher low, which starts our uptrend right at all the moving averages. We get the nice pop and we hold the 8 and then the show continues. We pull back, we hold the 8. The show continues. We grind the 8. So again, this is a fast trend for the market until we finally top out, but then we hold the 21, which we haven't tested since open. After we hold the 21, we get one more final push, and then finally it's over when we break back below. So again, guys, you can get entries at them, you can get a sense of trend, and you can really use these to help follow your rules, where if I get an entry, if we just go back to this example here, let it ride, guys, to your target. This is what I mean by following your rules, where say you got this entry, you're risking below cloud. And as long as it keeps grinding, guys, you have no reason to sell. A reason to sell and get out of your trade is when they start to break these things, signaling that the move could be over. But if you combine these tools, guys, and you follow your rules, you're going to catch a lot of great trades. It's just all about following those rules and trusting these indicators. So, all right, looks like we covered all that, guys. So that was a quicker section. Any questions on these moving averages, team? All right, let's see. DPS, how'd you decide the strike price? I'll explain that later. And yeah, let's go back to that Jumi example. You asked, in the Jumi example on page 36, you mentioned missing the initial inflection point. Wasn't it safe to wait since the volume was low? Yeah, it could, but again, we want to start to recognize patterns and inflection points where, look at the context here. It started to run very, very hard, and then it hit a key level, which I'm going to teach you guys about. When we hit these key zones, we're going to get a pullback. And as you've learned, we like to look for that pullback to that 1 minute cloud. So again, guys, you don't have to buy these things right away, but this is where you want to start to get ready for it to support your thesis. So again, with pattern recognition here, slight downtrend. When it gets here, yeah, I wouldn't get in. But as soon as you get that pop here, team, and it starts to rip through that downtrend, that's where we want to be looking to take that cloud bounce. And again, in this example, I missed it. So I let it run, I let it pull back, base at the 8, and then take that trade with tight wrist back below. And then it just keeps grinding away. So I hope that helps answer that. For slide 35, why do you not short on the big red candle earlier? Let me see, slide 35. Well, I broke the EMA's VWAP and cloud. You could have, my friend, right? You absolutely could have. And that's what's cool about scalping, guys, in the system is, I hit this trade for 150%. But when we broke here and rejected, guys, this is also a trade where you can make a lot of money on. So it just really depends which trades you're going to take. For me, I was overall bullish on the setup on Google. So I personally just let it go lower. Now, again, you can scalp these things, but I just waited, let it prove itself, let it hold, and then I got my entry and striked for 150% return. So with these tools, guys, there's no wrong, trade to take. It's just a matter of, respecting the rules and taking them when you should. Hope that makes sense, Offer. Jim, the first Google example, as it broke the cloud, overall the cloud went bearish while it was still going up. Future-looking feature of the cloud. So again, guys, don't worry too much about the shifts here. Like right here when it shifted red, we're still above it. It's just giving you a potential projection, which it quickly changed. So you guys can watch the twist in the cloud, but the biggest thing I want you to remember is when we're above it, we're bullish. When we're below it, we're bearish. BC, why VWAP instead of the 50 MA? It's just my system, my friend. Deepon, these trades are based off of 1 minute charts. So again, you can use these tools, guys, on a 5 minute as well, but I prefer, the 1 minute over everything. And Raw, these are all EMAs. So the 21 EMA, the 8 EMA, and then VWAP. And you guys will get an indicator, or you should have it already, that combines all of these. You'll have my exact drawing set that combines all of them with the cloud. So don't worry about setting that up. Tom, would this work with E-minis? Yep. Works with everything, team. Jim, great question. Do you enter at the average as an area, or do you use some price pattern for confirmation? I try to combine both, Jim. So if we look at this example here on Google, when it starts to just sit here, right? I don't necessarily want to get there because it's sitting there, but as it started to pop and ramp, that's when I want to look to take that entry. So again, a little bit of pattern recognition combined with these key moving averages. It's never just one thing, guys, like, okay, hit the 8 EMA, I'm going to buy it. You're slowly going to understand as we get through this webinar in class that everything builds upon itself. So, we get a nice cloud hold, we get back on top, we reclaim VWAP, we start to ramp, I'm going to take a shot. And boom, 150% ROI. Martin, another great question. Are you holding until price falls below both the 8 and the 21? So Martin, it depends your entry, my friend. Generally, for scalping, I like to play the 8 because again, it's kind of that quicker little grind here. So, if Google broke here and went to the 21, I still technically could hold it because I'm still green on the trade. But you want to make sure that it bounces quickly at that 21 and gets back above. So that becomes a preference. I think, if you follow the 8, just be careful because again, it can slip right below it and hold the 21 and keep going. But for the best, fastest trending moves, they are going to hold that 8 the entire time. So it is nice to have a tight stop right back below it. Like right here on Google, it finally hit the zone and then broke below it and just kind of chops. Bill, with VWAP, ES price seems to be pretty far away from it. Yeah, Bill. So again, we're going to push away from VWAP, guys, either above or below for most of the day. That's why really it only comes into play 1 or 2 times a day. And it's actually a good trend gauge, guys, where if we're just chopping around VWAP, there's no type of trend happening at all. You want to see it, break above VWAP and continue higher, or break below and continue lower for the day. Clarity, great question. Do you take a larger number of contracts when you have VWAP 8 and 21 in confluence? So yeah, guys, whenever you can have more confluence in the system, so again, combined all these things, that's why this Google trade was so great. I was actually trading a bigger picture squeeze as well. And then I come in here and I see it hold every inflection point in my system. So I will take this trade every time with tight risk below with an amazing reward above. So yeah, the more times you can stack these things, the better off you are. Jim, how long do you hold before going into a trade since price can bounce above and below the border of the cloud for several minutes? So yeah, Jim, it's never straightforward as wait 5 minutes. It's really scalping, guys, is very contextual. And again, you're really going to get the sense of that through this class where see what happens at these levels. They're all inflection points. So yes, they could just sit there and bounce at them, but usually something's going to happen. So we just want to be ready to execute. Rain, you have switched between 1 minute, 5 minute charts. When should each be used? So I would personally, guys, mainly focus on the 1 minute chart, and then you can start to reference a 5 minute chart as the day starts to unfold. As you get a little more information, the 5 minute can kind of help you zoom out. But for the most part, guys, focus on the 1 minute chart here, because that's really where a lot of this stuff just works. It's magic. Don, have you ever used the Heikin-Ashi candles? Actually, yeah, I have. Those are nice. So let's see, guys, a few more questions and I'll move on. Mike, so if you take a bullish cloud cross trade and it starts to run, then you use the cross below 21 as your stop. Correct, Mike. That's a great example. Where again, it breaks the cloud, continues to trend. You can either cut it quickly when the first fast trend starts to break. You can add more at cloud. You guys are gonna love how this kind of pieces together. Last question, you guys. On slide 35 around 10:10 a.m. Is that a lost trade? Let's see, slide 35 at 10:10. So obviously, guys, I can't see the times here, but if you're referring to shorting this cloud break, yeah, I would stop out. So again, I hope that happens. I hope that helps. So guys, I'm going to talk about strike selection. I see the question, why the 2300s? And again, we're going to get there. So just please bear with me. Not ignoring any of that. BC, sometimes the cloud is a faster or slower boundary than the 8 and 21. Yeah, it's going to be interesting, BC, to recognize their behavior, because every stock moves differently. Every cloud's going to form differently. So when you have all of these up, you're really going to start to see the relationship that they have with each other. And that's when they become super powerful. Is let it come to you guys, like this Google trade. Everything lined up perfectly. So it's like, boom, I'm going to take that trade. But all right, guys, let's keep moving here. And again, I promise over the few weeks I'll answer every question you guys have. But let's keep moving here for sake of time. So the next section, which I am super excited to finally share with you guys, is point of control, aka POC. Gonna call it POC for the most part. Point of control, guys, POC is a price point on a chart that reflects where the most amount of volume has occurred for a certain period of time. So this price point becomes the stock's most liquid level. And a really big key to understand here is all stocks do is travel back and forth to liquidity. Knowing where liquidity is and studying its behavior unlocks a massive trading edge. I focus personally on using what's called the monthly point of control. So I focus on the most liquid price point for the last 30 days on a stock. And you guys will learn how to find this. So a few tips here before we break it down. Even though I focus on using a monthly POC reading, I get that price point, guys, from a 30-minute, 10-day chart. So if you look up here in ES, looking at the 10-day, 30-minute interval time frame. That is where, when you guys install this indicator, you will see this blue line pop up. That is referencing point of control. That is the exact price level, this 412238. That's where the most amount of volume has occurred on ES, the overall market, for the past month. And this level, guys, becomes our liquidity spot. I personally like to check point of control every morning and manually add that level to my charts. So when you load this indicator up, it's going to give you that one line at 412238. So what I would do is simply just mark that with a price level. And what I recommend doing, guys, is color code it. So if you've ever seen my charts, I'll have a big blue line marked on it. And that's referencing this monthly point of control. So again, when you're referencing it, you want to go to this time frame, find the level, mark it, and then move on. Point of control does not move very often because it's such a big level. So don't worry about checking it all day. If you check it in the morning, you're going to be good to go. You just want to know where that price level is. And point of control, guys, works on everything. Futures, index, individual stocks. It is by far one of my favorite tools. Make sure, guys, again, to mark it on your chart because it will occasionally move up or down based on what's going on with liquidity. So when you mark this, guys, it allows you to follow the path, and that reveals a lot about the stock. So for example, with point of control right now, currently at, not right now, but as an example, at this 4122. If it stays here, that's great, but we want to mark it just in case it ends up going up here. Because what's that showing us, team, is that liquidity is rising. And this is all going to click in a minute. But if liquidity doesn't move, a stock is going to go back to that point. Where if liquidity rises, that means the stock is getting stronger. And that biggest price point is slowly stepping up. So this is why I recommend, guys, don't just pull up the indicator and reference it. Mark it on your chart. So when you go back and reference it throughout the month, you'll get a sense of the path that liquidity has taken, which I promise will make more sense here in a minute. And with point of control, guys, I like to keep extended hours on. Keep it on. Don't question it. It works like a charm. So here's the magic. Point of control, you can think about its purpose, guys, in two very simple ways. I like to simplify all of trading. So with point of control, it's two ways, guys, to think about it. The first way is a magnet. It acts as a magnet, right? Attracting price to it. And then the second purpose is it acts as a cannon and price will explode off of it. Let's dig into each. So first, guys, is the magnet. And again, this is point of control. It can be referred to as the magnet effect. So really important here. If price gets too far away from point of control, either way too far above it or way too far below it, price can work its way back like a magnet being pulled towards point of control. So if we look in this example, point of control is way below on the market, and we are trading a little too far away from it. So over time here, team, right, every day we start to make, these higher lows, we're eventually just migrating down to that magnet, right? So point of control below equals a downside magnet, where again, just because we're above it doesn't mean we're going to fall to it. But if we start to fall, that's exactly where we are going to fall to. And this is why it becomes a massive hack in trading. The magnet effect can also cause price to consolidate on point of control. So literally imagine a magnet, or we're far away from it, it's dragging it all the way to it. And then it can also get stuck on the magnet, right? It just sits there and chops on point of control. So those are the two main reasons that the magnet does, is if we're below it, we can rip to it. And I'm gonna show you more examples. And if we're above it, guys, we can drop all the way to it. And don't worry about finding this in TOS, guys. I'm gonna give it to you. It's in there. And last point here, point of control is one of the strongest and most accurate indicators that I have ever used, because all stocks do is travel back and forth to liquidity. If you can wrap your head around that last sentence, guys, you will be a better trader. Because again, all these stocks do is go to these levels. Let's look at some examples. Before we do, let's talk about the cannon effect. So the second usage of point of control can be referred to as the cannon effect. So we have the magnet and we have the cannon. Once price reaches point of control, so again, it can reach it and just chop on it for the magnet, but once it reaches there, we can expect at some point an above average move in one direction or another, blasting off like a cannon. Because remember, guys, this is the level where the most amount of volume has occurred for the past month. So when we reach it, the big boys show up. All the players that are, controlling the stock at that level, they show up to play. And a little hint here, combine squeezes, guys, with point of control. So what I mean by that, let's look at ES here, right? We know point of control is below. So, okay, we're going to start to play this thing down to point of control. It reaches it. And now it sits here, guys, and gives us the magnet effect. While it gives us a magnet effect, it's going to give us a squeeze, which I'm not going to spend this class talking about, but I'm sure we all know what that is. Once it squeezes here, guys, and consolidates on it, again, we can expect at some point that cannon effect, where it just rips off of it that next day. So Monday works its way to POC, little pop. Tuesday finishes the job and sits there all day. We chop overnight, all night on point of control. We go below it, right back to it. We pop on it, right back to it. And then finally, we get that cannon effect, where all the big players that are creating this level, they showed up. And if you look, guys, what happened after that? We went right back to point of control. So knowing where this 4122 level is and why it's that level is the ultimate trading hack. Because again, guys, look at this big push. And then it came right back to it. It's really crazy. And I'm going to keep showing you guys. So let's look at a few examples. We just covered the ES one, where it chops on it. After falling to it, it pops, and then it drops. But let's look at a name like NVIDIA and how it follows this one little level. So we have point of control here, guys, on NVIDIA at 610. If we take a look, we start the day here at 570, knowing point of control is above. So this becomes our target, right? We're getting that magnet effect. So NVIDIA, little wedge, and then absolutely just rips to point of control. The magnet can be very strong. Next day, it just coils on point of control, and then we get that little boom, cannon effect. So that would give us, guys, a nice little scalp here, not only to point of control, but then the next day, right off of it for a strong pop. And then if we look at the next session here, right, we kind of topped out. We couldn't go any higher. So we understand point of control is below, and we could go to it. What happens? We drop right to point of control and hold. Next day, what do we do, team? We rip off point of control. We get a little too far away, NVIDIA starts to top out, and we go right back and stop exactly at 610. So you can see, guys, in this NVIDIA example, just how accurate that one level is, and knowing where it is just gives you so much edge. Where again, this morning, we could play that pop off of it. This day, if it gets going, we can expect it to migrate to POC for that magnet effect. You know, if the market's bleeding here and we know point of control's below, that becomes our ultimate target for the week. And it just gets right back down fairly quickly. So you can see, guys, just in, 1, 2, 3, 4, let's call it a week here, all it's doing is traveling back and forth to liquidity. And again, guys, liquidity can move. Point of control can step up to 630, and then it will do the, dance with 630. But the entire time that it stays at 610, all NVIDIA does is just go back and forth to it. And that's why, guys, chop can hurt a lot of traders, where chop for us is great, right? NVIDIA wants to stay in this range, that's fine. We'll play it off of POC, we'll play it back down to POC. So many little, opportunities here when you understand this one little level. So let's look at a trade example, guys, on Roku I took not too long ago. This was an example of the magnet effect. The cannon effect. So day prior, we get a big drop here in bad news. Anytime, guys, a name drops some bad news, if the news is not that bad, it's usually going to go back to point of control. So if we look here, Roku gaps down on bad news. Next day, explodes to point of control, and then just completely stops. So I didn't take that trade. But the next morning, I understood that we could get the cannon effect off of point of control, looking to simply go back to a just basic inflection point here. So with Roku, guys, right it opens on it. So again, we're looking for this pop off of it through pre-market HOD back up to a key level. And that's exactly what Roku did. So I bought the 370 calls here, team, at about $1.74 a contract, and they quickly ripped off a point of control and ran right up towards that key level here in just a few minutes, showing you a 30-minute chart, but it happened very fast for 121% return. So again, we get the pop to it for the magnet, we get the cannon, and boom, it explodes to your next key level. And what happens, guys, when it hit the key level and failed? It came right back to POC. It's just that level, guys, that it's going to dance around until the level decides to move. So great example here on Roku. Let's look at an example, guys, on Boeing, which kind of combines all of them. If we take a look here on Boeing, guys, right, we had a little big pop it open and then a big aggressive drop, right? This is a big choppy day, but with scalping, we can add some clarity to it. So if we take a look here, guys, a few trades. I only took one of them, but there's a few great examples. One is that cloud crossover that we talk about, lining with all our inflection points. We got VWAP, we got all our moving averages right at that inflection point. So when it breaks it, what's it do, guys? It pops, holds the 8, loses the 8, but holds the 21, and works its way to point of control at about 266.44. So this is what I mean by I mark it on my charts. It's that 266.44. So after it hit point of control and then pulled back to, again, our inflection points here, guys, I looked for a dip buy. As soon as we bounced and held, I took a tight risk reward here and bought Boeing at 1.8 a contract on the 270 calls. We quickly, guys, bounced at VWAP, broke back above our moving averages. We broke back into our key zone, which I'm going to teach you about. And as long as we held that zone and continued to hold these moving averages, I had faith we would find our way to the magnet. And that's exactly what we did, guys. We did it once this morning, twice, and then I got the third time here for about a 61% return. So this is a great example of combining all of it, where we hit VWAP, we hit a cloud, we pop back out, we hold until we get to the magnet. So I hope that makes sense here, team. So you guys are going to receive point of control. However, I just want to talk very quickly about what it actually is in the settings itself. So volume profile is the actual indicator that point of control stems from. So if you guys were searching through this in TOS while I was speaking, you probably didn't find it. You have to type in what's called volume profile. Volume profile is breaking down every price point and showing you where the volume, how big the volume is at those points. Within that, guys, you get the point of control, and that's what I simply focus on. So again, these are just the fancy settings that you can look through, but you're going to receive point of control with these exact settings on. So again, guys, if you look, volume profile has all of these things: profile high, profile low, VA high, VA low. All I focus on is that POC, that point of control. So if you do want to set this up manually, you just have to uncheck everything else, only have the show plot here on point of control, and you're good to go. But again, team, you're going to be handed the exact blue indicator that I use. So, little summary. As you have learned, the true power of point of control is the ability to reveal the most liquid point on any stock or index. And again, if you can understand that all stocks do is move back and forth to liquidity, you will always have a massive trading edge, team. Big firms and algos, they need to find liquidity. All right, liquidity, guys, is where they can get transactions done, where they can find a large amount of volume to, get their orders filled. So again, these big firms and these algorithms, they need to find liquidity. So we just keep playing these names back and forth to liquidity with them because they are in control. They have decided that this price level is where we are in control. So they're going to push it off of it. They're going to sell and bring it back to it. They're going to buy again at point of control. As you've seen, we get that dance. So use the point of control magnet effect to play stocks back up to it or back down to liquidity. And then finally, guys, use the cannon effect for great entries at an explosive inflection point. So that actually summarizes, guys, point of control, and that actually is our section 1 conclusion. So that being said, guys, I will open it up to some questions here, and maybe we'll take a little break after this. I know we're going on 2 hours here. All right, team. Hope you enjoyed that, because this truly is one indicator that to this day, my jaw drops over how accurate it is. Like, I am in love with it. It is that powerful. I hope you can feel my passion for it. Question, what do you do when point of control moves? Do you work off that new POC or do you still use the old POC? Great question, Sylvia. So what you guys will notice when you're using point of control is it doesn't move often. But when it does, you want to mark both of those levels, Sylvia. So what I'll generally do is when I have, that blue line marked on my chart, if for some reason it moves up or down, I will just make that blue line dashed, and then I'll add the new one and make it a solid line. So what that does for me is tell me this is where POC was and this is where it now went to. So again, it's not going to move much. At most, you'll probably change it, twice a month. It really depends what's happening with the liquidity. So I recommend just marking them and keeping them. So again, you can follow that path because point of control, even old levels, they will still serve purpose because at some point, that was the strongest level. Where was I? I just got lost in the chat. Give me 1 second here, team. Hold on here, guys. I apologize. My chat moves with you guys. I'm trying to get to stay. All right, I'm back. Bill, point of control is like reversion to the mean, correct? Yes, Bill. Where I love point of control even more is it's going to be in play so much more than the mean itself. So if you're used to John's training or people in Simpler in the reversion to the mean concept, I love that concept. But my second and maybe even first favorite reversion tool is point of control. Because as I've showed you, on NVIDIA, it goes to it 5 times that week, where it's really not going to revert to the daily mean often. So I would combine both there, Bill. They're both amazing reversion tools. D'Angelo, do I use the cloud for futures trading after hours, for instance? Yes. PT only use a 30-minute POC. Yep, guys. So again, it's the level that's going to cover the monthly point of control, but we want to go and get that level, guys, on a 30-minute, 10-day time frame. That level, and again, don't question why. This is just the method to the madness. That's the level you want to focus on. Because as you guys will see when you have the indicator, point of control actually changes on the time frame you go to. So again, I've built a sustainable system around the 30-minute, 10-day point of control. It breaks up price action nicely, and it covers that month nicely. Jim, does point of control factor into pricing by the market makers, especially on opening if it's way off? No, my friend, it has nothing to do with market makers. It truly has to do with the volume and liquidity that's going on with a stock. So that's what's cool about it. It's, players are creating it. There's always a central point of control on a stock. And that's what this helps us reveal. And then again, the psychology is we're going to go to it, either above or below, over and over and over, until that liquidity decides to step up. And once it steps up, then we have another reference point to follow. Let's see. And yeah, guys, I did you should get a guide with the class, a complete breakdown of point of control. So I think I broke it down pretty well here, but you'll also be getting a guide as well to really help, drill it home. So let's see, guys, a few more questions here. I lost where I was. RGR, how do you save point of control in your studies tab? So any chart that you open, guys, that I give you, what you'll want to do on Thinkorswim is go up to studies here. So when you open the chart, go to save study, and then just save it as, POC. And then when we're prepping, right, we would go to a 30-minute chart, that 10-day. So I keep it on my favorite time frames. And then we go up to studies here. We're going to load studies. And then we're going to go to POC. And it's going to give you that blue line team. So if we just look here on NVIDIA this week, what's it done, guys? It's gone back and forth to that central liquidity point. It drops to it. It drops even more. And we can combine this with other things. It bounced off a big moving average on the daily chart. It starts to migrate all the way back. Rejects it. And then works all the way back, guys, and chops on it all day. So again, you just want to save your study sets so you can load them up afterwards. Milo, the best point of control explanation ever. Awesome. Glad you guys like that. Truly is one of my favorite things. So let's see, you guys, a few more questions. I apologize. I got lost in the chat. Rocky J, do you find that some trading products trend better and provide better trading vehicles for your strategy? Not too sure what you mean by that, but I just focus personally on, trading the US markets, trading indexes, trading good stocks, and leveraging them with options. That's personally my strategy. Daily grind, how do you know a point of control can is going to happen? So again, guys, it can just sit there and chop, but just like any of these indicators, it's where we want to look to get ready. So for example, NVIDIA closed the week right on point of control. At that point, I'm just going to be waiting for it to explode off of it one way or another. And again, guys, not here to teach the squeeze, but if it just keeps squeezing on point of control, just a matter of time, where again, we can now expect an above average move. Trigger shy question. Last 10 days didn't seem like much on a 30-minute chart. It works, my friend. Promise, guys. Don't question things until you try them. Not to sound rude there, but it's worked for me for years. So again, giving you guys my system. So Raj, could you share settings for point of control on TradingView? I don't have it, my friend, but I can definitely look into it. So again, I would look up the indicator volume profile and then look for that POC. And for everyone, guys, TradeStation, Interactive Brokers, whatever it might be, they're all going to have that volume profile indicator. And within volume profile is that point of control line. So you might have to do a little editing to hide everything else, because let me just show you guys what it looks like without it cleaned up. So this is what you guys are going to receive on Thinkorswim, is the point of control line just there. But if I clean this up, bear with me real quick, and you just type in volume profile, it's gonna look like that, which is ugly. So again, it takes a little editing, but you guys are gonna get, the entire indicator if you're on TOS. And if you're not, guys, just go and edit it and focus on that point of control level. And then look at the settings that I've tweaked to see if you can change some of those exact settings as well. Dr. HPA, I love it, man. I'm excited to keep sharing my gems. Richard, your wife is point of control. Milo, great question. How many point of controls do you keep and when do you delete prior ones? So I usually, guys, focus on, I focus on it for the month, and then I focus when the new month comes on where the last one ended. So for example, we're 1 week into the new month. So I still have on my chart, last month's point of control while updating the new one as it forms. So really, guys, you only need, the current one and then the past month, and then just update it as needed. And yep, BC, you go to the 10-day, 30-minute chart, you find it, and you simply just mark it, team. So again, just to show you that real quick, if we're looking at NVIDIA here, right, we want to go down on TOS, grab a price level, and then just simply go here, add that price level, edit that price level, and then just do a little editing here, guys, to make it big and blue, and then I save it. And that's when we can, get rid of it, go into 1-minute charts, and base our trades around that. So again, guys, it's just a single line you want to drop into your chart. Nothing fancy. And yep, if you save your drawing set, guys, it'll show on all time frames. So that's why it's important to just mark it. Let's see here, guys. Westy, you use for both intraday and the 1 hour, the 4 hour, and the daily. So yeah, guys, again, it's just one line. So you just want to know where that line is. You can trade around it big picture. You can trade around it, intraday, whatever you want to do. But for example, here on ES, if you wanted to buy puts for a week out, expecting it to fall back to point of control, you can. So again, it's just a point, guys, and a level that you want to understand. And that's why it's so powerful. DB, where do you keep extended hours on? Great question. So on Thinkorswim here, guys, if you go up to the little chart setting right here, and you go to equities, you want to make sure you have extended hours trading showing. And if you do watch the futures like myself, you want to make sure you go to the future section and make sure the same thing is checked off here. Let me get rid of that. All right, guys, a few more questions and then we'll jump into a break. DL, I'm glad you brought this up. Isn't the time frame of the chart changed towards the end of the month? Yes. So final tip here, guys. Towards the end of the month, so let me pull up my TOS chart again. Here's a good rule of thumb. Use the 30-minute 10-day chart, guys, until about the last week of the month. When you get to the last week of the month, you want to switch it to a 15-day time frame just to give you a little more time to see the actual level itself. So I'm glad you brought that up, DL. Thank you. But most of the time, the 30-minute 10 days is going to be good. When you get to that last week, you can, just reference it with the 15-day. It'll usually be the same. Let's see, team. Any scrolling here, guys. A lot of questions, so I apologize. I won't be able to get to all of them. Hopefully answering the ones that matter. So yeah, guys, blue is not default. That's just a blue line that I have. In the indicator itself, I actually think I made it green, so you guys will get a green one. That looks like this. Right, it's just gonna be green. So you can change the color however you want, but you just want to know where the line is. I'm glad you guys like this. Point of control explanation, pay for the class and more. Yeah, guys, I'm telling you, and this is coming from, friend of friend here. If I could only use one indicator, it would probably be point of control. Because again, it's just truly knowing where the stock can go. But all right, guys, let's see. Any final questions here? If not, we'll take another break. I know I'm pretty long-winded here. I apologize. I'm trying to stay within the time frame. So we'll take a 10-minute break here, team. So let me write a bigger note this time. I wrote a very small note last time. All right. Fortunately, guys, it's going to be the same looking note. I can't get it bigger here. But all right, it is 3:20. We'll be back at 3:30 Eastern time, guys. So 2:30 Central Time. We'll be back. But all right, guys, thank you. Go enjoy a little break. We will dig into the next section, which is zone to zone, how to mark up charts, find those inflection points, and we'll go from there. But go enjoy some fresh air, guys, and we'll be right back to work. All right, team. Hope you enjoyed a nice little break. Let me know if everyone's ready to get back to work here. And I really hope you guys enjoyed that point of control section. One of my favorite indicators. Awesome, guys. You ready? Let's rock. Let's rock. All right. So that was our conclusion, guys, of all the indicators in the system. We learned the Ichimoku Cloud, 21 EMA, the 8 EMA, VWAP, and most importantly, point of control. So next section here, team, is going to be called zone to zone. This is a term that I've created, and you will learn why. Let's dig right into it. So in this section, guys, we're going to talk about inflection points in zones. So in this section, we're going to take a deep dive into my philosophy behind marking up charts and finding key levels in zones. In this section, we're going to learn the psychology behind zones, time frames to find certain levels to play around, how to create your zones, how to trade with your zones, and then combining zones with your indicators that you've learned. Let's get right to work. So inflection points in zones introduction. Inflection points, I know I say this word a lot, these are levels and areas on a chart where a big move in price is likely to occur. As a day trader, you want to discipline yourself to be patient and only try to trade at inflection points. It's a big, big key to internalize here. Inflection points can come from bigger picture key levels and also from certain indicators, as we have hopefully learned by this point. Clouds, point of control, all of those things are inflection points. These are where you want to trade around. Biggest thing, guys, with stocks and key levels is stocks don't just have a specific key level. You know, this is something that it took me a while to learn. And now that I've learned it, it's changed the game for me. Where NVIDIA, you know, the resistance isn't always 620, you know, to the cent that precise. It's never just specific key levels. What it is, guys, is actually key zones. And a zone is when you combine key levels and you map out inflection points and liquidity, and it actually starts to reveal and give you a roadmap that the stock has no choice but to follow one way or another. Zones, guys, help you understand not only where to place trades, but where to exit and manage those trades. So let's get right into it here. Let's talk about the psychology behind zones. So as you've learned, team, you know, trading is all about supply and demand and liquidity. And as we've discussed, all stocks do, right? Every index, every stock itself, all they're doing is going back and forth to liquidity, AKA these big supply and demand areas. Here's a cool fact for you. In 2020, so last year, about 70 to 80% of overall trading volume was generated through algorithms, AKA robots. Algos are programmed to drive stocks back and forth to these major supply and demand zones, to these major liquidity spots, such as point of control. Final point here, guys. We don't want to fight robots. We want to play on their team, right? We've all seen movies when robots turn against us. We want to be on their team, guys, especially in trading. So this is just an example of what zones look like once you learn the skill of drawing them. And just to quickly map this out, this is showing you guys where the stock can go to. So if it holds this zone, it can trade to this zone. If it breaks this zone, it can go to here. If it doesn't break here, it can go to here. If it breaks here, it can go to here again. And if it holds here, it can go back to this one, back to this one, back to this one, back to this one, back to that one, back to that one. This is what I mean by it gives us a map that the stock has no choice but to follow. And a really important thing to note here, guys, before I dig deeper into this section, is this is not something that is going to stick right away. You know, this is not an indicator that you just slap on. This is a psychology and a method when it comes to marking up charts. So Be very patient with this concept, and I promise you, once it clicks, it's game over. So just bear with me, guys, and get through this section, and hopefully it makes a lot more sense. So first, guys, let's talk about the time frames to focus on for finding your first inflection points, which will first start to build your zones. So for me, in my system, the daily chart is where I like to find most of my major inflection points, because the daily chart is that big zoomed out picture where it shows those exact levels that truly matter, right? There's so many little levels in between, but the big levels on the daily chart, those are levels on a daily chart for a very specific reason. So I focus a lot on the daily chart for finding these levels, and then I focus on the 4-hour chart for filling in extended hour levels, meaning sometimes there's levels higher that you can't see unless you go to a smaller time frame and it happened after hours. So again, I like the bigger picture daily and then hop into an intraday chart to kind of fill it in from there, any missing points. The second section here, guys, I focus on major highs and lows, right? So just big highs of days, big lows of days, big highs of certain areas, lows of certain areas. These are the best inflection points. And the main reason, guys, these are inflection points is because that is exactly the point that we stopped where there was a major shift in price. So I'm going to repeat myself there. These are inflection points because that is the exact price level where the game changed. So what I mean by that, team, is look at this NVIDIA example right to the right. This key level, 589, what you want to ask yourself when you're finding key inflection points is what happened after that key level? What happened after we stopped here? We dropped to 480. That is a monster inflection point. When we got back to it again, we dropped another, right, 90 points back down to 500. So these are the ways to find inflection points and think about it, is where was there a major shift in price action? Because again, that exact point, it never traded higher than 589. That's a huge inflection. We get back near it, back down, right back near it, back down. These are the levels that you want to start to wrap your head around and slowly start to hunt for. So again, really think about where was that exact point on a stock that there was a major shift in price, whether it was an extreme dip buy or whether it was an extreme rejection. Find those levels, team. Let's keep moving here. One thing I didn't cover is I love these bigger levels, guys, but I also love pre-market levels for smaller inflection points. As you'll learn, we combine the bigger picture inflection points and then we fill it in with littler ones to just kind of make our map a little more accurate. Let's keep working here. So we're going to build on this NVIDIA example. So in this example, we have all-time high level that took a very long time to break. So again, we have this 589 key level for a very long time. When we hit it, we dropped to 480. Huge. We get back up, guys, we drop again. We get back up, we drop again. Only finally did we break through that inflection point and gave us another exact level it stopped. This level led to a drop to 460. That's huge. So these two big levels, guys, now gave us a zone, right? They gave us a massive supply and demand zone with two major inflection points. Making sense? We're going to keep digging deeper here. So when you're marking zones, guys, and again, this is a psychology, so really listen here. You want to ask yourself when you're going to mark up charts, what does the stock have to deal with next? Meaning, if you look to your left, what level do I have to deal with? If we're looking at NVIDIA here, obviously, guys, we don't have to deal with this zone for a very long time. So yes, there will be other levels, but you want to ask yourself, what does the stock have to deal with next in order for it to continue its journey? Let's keep digging into NVIDIA here. So how to create actual zones themselves. So as I just showed you, zones start off with two major inflection points. On NVIDIA, this was our prior all-time high, and then that new all-time high that took almost a month to break through, probably over a month, right? Yeah, multiple days. So those were our 2 points. Both of these levels were major inflection points because price stopped right there and then went on a major turning point. Now, the logic becomes, if and when price gets back to this key zone, and if we can clear this inflection point, we have a major move coming. Because remember, team, picture it like this. We got stopped at that key level. So remember, this is a game of buyers and sellers. There is somebody physically here stopping this stock. They let it through and it exploded, but then it stopped right there. So now again, the logic becomes, guys, if and when we get through that, all of those people are now wrong, and all of those people are going to start to get out, and it's going to cause that inflection point through that zone. So back to the slide here. That's where the logic is, guys, where if and when we can clear it, we have another major move coming, because that was the true stopping point for the stock. This is key. So again, guys, this is the zone that we are dealing with, and we're going to talk about what happened when we finally get to that key zone. So how to trade with zones, right? That's a little glimpse of how to mark them up and how to find them. And then let's look at, how to actually execute and trade around zones. So again, guys, there are so many other little zones that would lead up to this big one, but we're just going to focus on one zone at a time to really help drive home the logic. So obviously, there's so many trades as it gets to it, but we're going to focus on what happens when we get to it. So weeks later here, we got that zone established, right? We hit it and we dropped again. We started to work our way back. This leads us into the next component, which is how to trade with these zones. I call this strategy and execution philosophy zone to zone. So, if you guys do the live trading with me, or, you hear me, I'll talk about, a trade going a zone to zone. I'm gonna look to take NVIDIA zone to zone. Let's dig deeper into what that actually means so you can understand my philosophy here. So zone to zone. The first way to trade with zones is playing price up towards the first level. So if we look here, team, on NVIDIA, this is the zone, right? This box here, this shaded area comprised of these two levels, that is our zone. So anything below it is not a zone. So the first trade that we can take around zones is playing it up towards the first level that comprises of that zone. So if we look here on the day where we slowly got near that level, the first trade would be when we break pre-market high. So as I mentioned, those pre-market levels are really good inflection points. We have a pre-market level, we do absolutely nothing, and then look what happens, guys, when we break that pre-market level. Look at that volume. These are where we want to play off of these things. And so remember, the first trade here is heading towards a zone. So we always want to take the little inflection point to play towards our bigger inflection point. So the first little trade here, guys, in this NVIDIA example would be from this 567 pre-market HOD up towards the start of our key zone here at 589. So we get the break and we get the push to zone. That's the first way to trade with zones, is playing little inflection points up to the start of them. And now this leads into the next trade, guys. And this is when we actually start to go zone to zone. So the way to think about this big gray square here is every trade that you take, the first one is when we first enter the zone, with your target being the top of the zone. That's what gives us, again, I hate to keep saying this word, guys, over and over, but that's what gives us the zone to zone. So when I say that, I mean I'm looking to go from the first section of it to the second section of it. So you can see here, guys, we break it, we hold it, and then we travel and migrate to the next part of the zone. So this entire trade here is our zone to zone trade. Hope I'm making sense there. Where again, consider this, guys, a map of liquidity, where when these key inflection points break, They ignore everything in between. They ignore every little level, and they just go to those big key levels. So again, we run up to the big one. We break the big one and we hold it. That signifies, guys, a potential of NVIDIA to complete its journey of its little roadmap to now the top of the section. So again, we have our pre-market high level. Market opens, we do nothing. We get our first little inflection point, which leads us to our real inflection point. We break our inflection point and hold, which initiates the next trade up into the top of our zone. So this example, guys, of kind of laying out the map where if NVIDIA breaks 589 and holds, it has a really good chance of getting up to that 615. Based on the psychology of when these things get tested, they're going to push to the next inflection point. So let's keep moving. The final trade, guys. So again, we have the trade up to a zone. We have a trade through the zone. And now the final trade becomes when we leave the zone. So you guys might have heard me talk about, in my live sessions, places where you do not want to touch a stock, right? Called the no touchy zone. Really no reason, guys, to touch NVIDIA in here. Let it do its thing. Remember, we want to play at inflection points. We get the inflection, trades over. We hold the inflection. Now we get another trade to this other inflection. So make sure, guys, if you're not trading these levels, that you're really not looking to trade. Where again, the final trade after all of these is when we finally now leave the zone. So again, I hope that makes sense, guys. We get the first push towards it, and then we enter it, and we go zone to zone. And now we're going to leave that zone and head to the next one. Hope I'm making sense here. Let's keep working on this example. Think of it like ping pong. You're going back and forth from one level to another. This is the liquidity path and the roadmap that we use to trade stocks, guys. Because remember, those inflection points, that's what's mapping out the liquidity map that it's going to follow. And that's all it does here, team. If you trade around these inflection points, you greatly maximize your trading probabilities. Look at the difference, guys, of trading this, and when it breaks, it runs to it, and then when it breaks and holds, it runs right to the next one. Super, super key. Let's keep moving. So we cover, guys, the inflection point, looking to play it here. Now the next day, what becomes our next trade, team, in the system? It's now when we exit that zone and continue higher. So if we look at the next day, we open right under that key level. We pretty much ran all the way up to that key zone. Like John Carter says, guys, don't be a dick for a tick. It got close enough. So you'd want to exit that trade. Now the next day, we want to be ready when it breaks that inflection point and gives us another move. So you can see here the next day, NVIDIA continues its journey, it breaks through it and holds and continues higher. So that's our inflection point. That's our inflection point. This is our inflection point. These are the things that we want to focus on trading at. And so as you can see, guys, we ripped out of that key zone, right? The next day we retested it and explode even more. And then finally, these zones will always come back to play because they are a roadmap. So again, we got a little too far away. We ran through all-time high. It was inevitable that NVIDIA would turn around. So again, we have our downside map of what it could and should do. So it falls all the way to our zone. So again, just like to the downside here, team. You want to play that first trade to that zone. We can add a nice little inflection point here of low of day. So again, I like highs and lows of recent days added to those major inflection points. We drop all the way to it and we hold. Next day, guys, we try to break out and fail. So now the logic becomes, if we fail here, we're going to head to the bottom of our zone. And now something to remember, team, is it's not always going to get there in one day. So you always want to try to update and add little levels, those little inflection points that build upon the bigger inflection points. So again, we drop here and we hold. And then we fail and we drop and we almost go zone to zone, but we stop the day right here. So I like to add that key level in between my zone. We travel for the next day back to the zone top and we completely fail. And then we finish the journey here, guys, back down to the bottom of it. which then turns into the ping pong action back up to the top of it. So again, guys, I hope this is making sense, but these levels kind of dictate the map where if it's below 615, it's got a good shot at going to 590. If it loses 590, it's going to go to the next one. But if it holds 590, it's going to migrate back, guys, to these big inflection points. So again, it gives us a roadmap. We short it here down to here. We buy the dip here. We play it back to here. It gives that roadmap for entries, exits, etc. Let's keep moving. So combining zones, guys, with indicators. When you're building zones, focus on those inflection points, right? Always start with actual price levels. Go to the daily, start to mark those things up. The next thing you want to do is start to fill in and create your zones with major indicators, such as point of control levels and certain cloud levels. When you're creating zones, guys, focus on bigger cloud levels, right? Don't build a zone around a 1-minute cloud. Build a zone around a daily cloud, around a 4-hour cloud, which I'm going to show you here. So in the square example, this key level, guys, believe it or not, was here before we hit it. So this was a key zone that I had this day. This was the 50-day moving average, and it was an exact price point from the prior day. Below it, team, I zoned it with a big daily cloud top. So a big, nice support level. So that becomes my 2 major inflection points that compromise of that zone. And adding the indicators, guys, I had my inflection point above as point of control. So this example, guys, we open, we migrate to point of control and reject it. So again, if we fail here, we can go back down to 240.34. We go right back down to 240.34, and we bounce. When we bounce, guys, right, if we hold here, following the roadmap, we have a good chance of heading back to point of control. We hit it, and we migrate back here, team. Where vice versa, if it broke through here, rejected, we would probably head back down to daily cloud top. So it's just adding these indicators to help make our map a little bit stronger. All right, so price bounced off the top of our zone, pushed all the way back to point of control. Hopefully, guys, you're seeing the system slowly come together where we're combining indicators, we're combining inflection points. They're giving us a map, and we just have to execute when we get to these inflection points. So here's an example, guys, on ES of using inflection points and zones combined with indicators. ES had 2 major inflection points creating our zone. Again, I really focus, guys, on basic highs and lows. They might seem like just 2 basic of levels, but I promise you they are not. They are the most powerful levels because, again, that's the exact price point that they held it at, right? The high a day is the exact price point that they were like, this is enough. That's why I like these levels, guys. So with ES here, I had a basic zone team. This is an example of good little zones. I took this little prior wick at 4101.25, and I zoned it with this wick, that 4113. So this is actually that example, if you guys remember, from the cloud, where we were above the hourly cloud forever. And then we finally broke the hourly cloud and started to head to the 4-hour cloud. So you can see here, not only do we have our zone and inflection point of support, but we have the 4-hour cloud lining up with it. So that makes this dip buy so much more, stronger, right? Better confluence. We have 2 major inflection points, and we're combining our indicators. And if you guys look, the map I had in this example, if we break through 4-hour cloud, and if we break our zone, we can head to the bottom of 4-hour cloud, which lines up with an old zone using an old point of control. So again, you guys are slowly going to hopefully learn this methodology where we had an upside zone where we bounced and we can head back to it. So again, it's that kind of ping pong effect where if we break here and head here, we come back down to here. If we lose this zone, we head back down to this zone. If we lose this zone, we head to here. If we hold here, we can go back to here. So again, guys, this is an example of combining your indicators, such as these bigger picture clouds, to help support these zones. So again, we had our 2 inflection points, we had our cloud, we hit it, and we popped nicely. Price held the zone in the cloud and continued its journey higher. So I'm gonna show you a trade example here, guys, on NVIDIA of trading a zone to a zone. So I had these key levels marked, right? This was my map of liquidity. And you can't see it, but NVIDIA had gapped up nicely this morning on good news. So what I was looking for was a push and pullback back to my key zone. Remember, we want to play at inflection points. So if NVIDIA opens in the middle of our zones here, we need to wait for an indicator. Well, I got lucky, and we actually pulled back this morning to a key zone. So the logic now becomes, guys, if we hold this key zone, we can run to this key zone. So quickly that morning, as you guys know, we're under the cloud here. So we want to make sure that we pop and break that cloud and then continue to our next zone. So in this example, guys, they had really good news pre-market. So I was very bullish and very aggressive to buy the dip right at this key inflection point, right at this key zone of 536.84 and 533.68. Quickly held, quickly popped with strength, and I grabbed NVIDIA's 600 calls at 3.1, so about $310 of risk. We quickly ripped back to that cloud and quickly ran to that zone, guys, in literally 3 minutes, 2 minutes. Just boom, huge explosion here of about 10 points for about a 75% return on my money. And if we clear this up, there was more trades to be had. I just personally didn't take them. So when we run from zone to zone, we're going to get that pullback to VWAP. Like I had mentioned in the VWAP section, when you have a strong stock pop it open, you're usually going to get that initial pullback to VWAP. So that's what this was. And then what's it do, team? It now breaks that zone. You go zone to zone, and then you break it, you retest it, and you continue higher. So again, it's the structure of the map combined with a few of our indicators to get a sense of where this thing should start to travel and where we should be placing risk and where we should be looking to lock it up. So hope this makes sense, guys. A good trade here on NVIDIA. And let's look at a little Google trade. And I apologize, this screenshot is a little blurry. So Google, guys, was set to open right at my key zone. We were above a nice little bullish cloud. So again, we had our entire projection here pre-market of a bullish cloud. And we were set to open above my moving averages and right at my key zone. So right at open, guys, I bought Google here, risking back below my key moving averages and back below this key zone. We quickly popped. We pulled back and held. We popped again. Almost got there. I held on a little longer. It continued to hold that 8 as we've learned. And then quickly, guys, finally reached the top of that zone. And I locked it up for about a 50% return. And you can see, guys, once it hits that zone, the trade ended. It now goes back to the bottom of it, breaks it, and then rejects it and continues its downside journey. So knowing where these inflection points are, guys, are the magic. And then again, it gives that roadmap where if it just holds here, it should go here. Doesn't mean it's going to break out of here, but if it does, you get the next trade. If not, you could fade it back down to this zone, play the breakout of it, pops back, rejects it, etc., etc. So here's a little tip, guys, on some zones. Start with a blank daily chart and start to mark the biggest inflection points. So I will do a quick example here, guys. I do have a little bit of lag on my mouse if you haven't noticed, so it's going to be a little hard to work in charts, but I'll try an example here really quick. But start with a blank daily chart and start to mark those big inflection points. And then again, ask yourself, what does the stock have to deal with next? Right, guys, this is not an indicator. This is a philosophy. So it is a little bit harder. But if you can master this, it's going to change your trading. So again, ask yourself, when does the stock have to deal with next? Find those stopping points, and you will start to see the roadmap unfold. Remember to use the daily chart, but also reference a 4-hour chart, or 1 hour, whatever, to catch some extended hours levels that you can add to zones. So again, I like pre-market lows. I like after-hour lows. Sometimes, guys, there's a level through all-time high that you won't see unless you look at extended hours. So again, just make sure you look at both of those. Don't forget to reference indicators as well when adding to these zones, when applicable. Don't force it, but when things line up nicely with your zones, like I showed you on ES 4-hour cloud, that's where it's perfect. Discipline yourself, team, to only trade around these zones. If price is in the middle, wait for one of the inflection points to first get reached. So for example, here on Google, if we're just chopping around, guys, wait till you're at an inflection point, right? And boom, buy that dip, and it works up to the next one. We're in the middle, just wait, and then boom, you play that inflection point breakout. So really, in the middle, guys, we had point of control. We're just chopping on it. But when you reach these key levels, that's when the fun stuff happens. So I hope that made some sense. So with that, guys, I will open up questions. That concludes the section on inflection points and zones. And I know this isn't, the easiest concept in trading, but I promise, go back, watch this, start to practice making zones, and it'll all start to click. And because you guys were kind enough to invest in, yourself and me, feel free to email me your charts and your zones, and I will look at them and give, feedback and criteria. But let's open up to some questions here. And yeah, I'll do a blank chart, guys, in a minute. Arnie, why not just trade the cloud? There were some promising setups too. Yeah, you guys can use any of this. I use it all together. So again, guys, look for that aha moment for you. It might have been the cloud, it might have been POC, maybe it's zones, maybe it's everything. Ken, how many days/months do you view when setting up zones? Great question, Ken. So again, you want to focus, guys, on what does the stock have to deal with next. So let's go look at NVIDIA real quick on a real chart. Let me just clear it up. So let me just let me go back in time, guys. Actually, no, we'll focus right here. So again, guys, my mouse is a little bit laggy. I apologize, but say we are right here on NVIDIA, right? The first thing that we have to deal with, right? If we had this session, we want to look to the left and ask ourselves, what comes next? So what comes next here, team? That inflection point, right? It's lower than this one. We dropped here. Price ran, and as soon as it hit here, it has been rejecting us, but we're holding up. So now the first zone to become, if it breaks 540, again, guys, go ask yourself, what's next? Doesn't matter levels way in the past. It matters what it has to deal with. So we look here, the first bigger wick I'd focus on is that 556. So the way to actually draw zones, guys, is with basic key levels. And you want to come in here and change your tool to your rectangle. And when you add your rectangle, you simply just zone it. And that's what gives you a zone. Now, if we move forward, let me just extend this. You can see, guys, the next day, it gapped into our zone, held our zone, and worked towards the next one. So it really is as simple, guys, as looking to the left and seeing what it has to deal with. There's no point in focusing on 620 while we are right here. But if we look, this is a nice little inflection point. Where again, if we clear here based on liquidity, we're going to run right back to this one. So that's what gives you guys this little day trade. And again, this might look like a small daily candle, but that's a massive opportunity. Just simply mapping out 2 inflection points and where it can travel. So again, guys, if it clears here, we get another little inflection point above. And you can see, just to keep moving with this example here, we ran to it and stopped. Next one, guys, we break through it. We head to that major inflection point that caused a drop from 620 to 460. So is this making sense, team? We want to focus on what's next. So we cleared this zone. Once we cleared this sucker, right, ignore all the little stuff in between. Where was the big inflection point? Right here. We ran right through all that crap, right? All the little crap, right to the big level. That's 614-ish. So again, guys, this would be our zone here, and we'd play zone to zone. You would just make it a nice, nice visual like that. So again, guys, if you do the live trading with me, what we're going to do is we're going to mark up zones together. I'm going to share with my zones for the day. So you'll have a chance to not only use my levels, but see me make these levels and then actually go back and back test them yourself. You know, the biggest thing and way to learn this is by taking my charts. So again, you'll see my charts, guys, in the options room. You'll see it with the live trading, but start to reverse engineer them. You know, why did Chan mark 540.50? It's because it was a very simple inflection point here on the daily. And I want to focus on the next level it stopped at, which is right around here, right around here. And you guys can see it's giving us slowly that roadmap. So I hope that makes sense. Let me look at questions. GM, is there an indicator to create zones? There is not. You know, not to tease you guys, but I actually am creating an automated indicator to structure zones automatically. But again, that's just me spilling a little secret. If that ever comes to fruition, you guys will know about it. But for now, it's a manual skill, which I actually don't mind because, again, it's a philosophy, guys, where some indicators you load up on your chart. Something like this, it's a skill set, and that's important. Michael, great question. How do you set take profit when it's a trading above all-time high zones? Great question, Michael. So whenever we break all-time high, which in this market happens a lot, I focus on what's called average true range, which is a number that you can get on any stock or index. So for example, if NVIDIA has a 20-point ATR, that means it can run on average about 20 points either above or below. So if we break 600 and that's all-time high, I'm simply expecting it to get to 620. Doesn't have to, but it gives you something to focus on above all-time high. I know some people use fibs, so that's another great level for extensions above. I personally just focus on psychology and ATR. In Rayon, yep, you can use fibs to mark zones. So again, guys, whatever your system might be already, this can hopefully complement it, or you can just simply do it the way I do it, which is with the few indicators I shared, and then again, just finding those major inflection points. Steven, how do you create the shaded area in between? So hopefully I showed you guys that. It's simply just, and again, every platform is going to have these. It's just a simple line. And then it's your rectangle here. So whatever you use to draw a rectangle, I just, you know, make it visually look better by doing things like that. Ashvin, do you create an inflection point on a weekly chart? How did you create the NVIDIA and Google zones? So I'm not going to break those zones down, guys, but it's the same philosophy is where I'm focusing on, you know, the daily levels that are coming next. And then I'm filling it in with, you know, little pre-market levels, you know, little intraday levels, but really trying to focus on those bigger turning points on a daily chart. So again, this is something, guys, it's not going to click right away, but I promise if you just start with an empty chart and you focus on those turning points, you're slowly going to start to get your map. And again, I promise to share my own charts, share my zones with all of you so you can start to really internalize this skill. Rafa, when you have zones in the 1 hour, 2 hour, 4 hour, how does one decide on the length of time for zones? I don't think I'm understanding your question there, but I'll try to answer it here. So Rafa, the 1 hour, the 2 hour, the 4 hour, it doesn't really matter which time frame you use. It's just, again, trying to find those pivot points, those turning points, those levels that actually mattered. So you can use a 2 hour to help identify those, but between the daily and, you know, one of those charts, you'll be able to see the picture pretty clear once you get used to this. So I see the gray zone a few times, guys. Hopefully that question's been answered. Let's see here. Loopy, on page 64, it seemed that zone to zone lasted a whole day. What does it mean for Friday Lotto in terms of theta decay? Oh, let's go back and look at that. 64. What's it mean for theta decay? I mean, the thing is, guys, you can hold for the entire zone, or you can get in and get out. So for example, on this trade here, this is a beautiful start, right? We got this first trade, and then we get out. It holds. We get a little flag, right? It's a nice little pattern recognition where price pops, starts to create these little lows, but holds support, and then breaks through it. So you could take that trade, guys, at your zone, and then get out here as it chops. And if you throw on your your other indicators, it's probably holding moving averages, and you can play that next little high of day to the next part of your journey. So I really wouldn't worry about theta decay if you're holding this whole time. As long as it's going higher, you're in good shape. But if it is Friday, for example, and you want to control your risk a little more, you can just focus on those bigger pushes and then getting it on the next leg. So you can combine the 1 minute cloud, all the other tools here to kind of help the stock go zone to zone. Karen, great question. What do you consider too many zones on a chart? So be patient, guys, when you start to practice this skill set, because you're going to have a bunch of little zones at first, but it definitely is an art of creating these. So again, just focus on bigger levels, focus on where it really turned. And if you have too many next to each other, zoom out and get rid of some and just focus on where did it really stop and make a big move. And that'll help you kind of focus on the bigger levels. Deb, how do you draw the zones and toss, and do they carry over to other time frames? Yep, absolutely, guys. So, just to give you this example here on NVIDIA, right, we drew this zone for 4-1. So if I just go to, an hourly chart here, a 15-minute chart, and go back, right, that's going to be right here. So again, if we just break this example down, guys, we gap through it on pre-market, we hold it at open, and we rally. We consolidate, so you can now add that high of day as a little inflection point to then, boom, continue your push towards the next key zone. So it does line up, guys, if you draw it on the daily chart. And again, if you're used to toss, you have your drawing sets, you can create new ones, save them, et cetera, et cetera. Offer, can you give a real example of drawing zones? Yep, hopefully I've done that. And do you use the wicks for drawing them? Yes. So really, guys, focus on the wicks. Those tell a lot. They tell a lot. Remember the psychology behind this. Bill, on page 69, why did you select the candle with the long wick? Let's go look. All right, great question, Bill. So the reason I selected it, guys, is remember, I want to ask myself what happened after that point. So after this little point, we popped all the way back and then rallied for the day. We stopped right here. So I made a little level. We came back down and popped again hard. So that's what gave me this downside zone to focus on if and when price comes back. So again, guys, it starts to travel through zones. It now holds this zone that we had prior. Right, guys, this is how important these inflection points are, is when we come back to them, they usually hold. And then if we break it like we did here, we're simply headed back down to that next zone here, team. And again, we didn't quite reach this key level because we had this level, we had the cloud as nice support. So I hope that helps, Bill. Grace, great question. How often do you mark zones? So I usually mark my zones, guys, when it comes to the weekend. I do my weekend prep. I strip my charts down naked and clean, and I start fresh. And usually, depending on how fast the stock travels through these levels, you have to do a little updating. But if you start fresh, guys, in the weekend, you usually get a nice roadmap that you can kind of carry with you, for the week. So it does take a little updating, but it really just depends on how the stock reacts. David, I'm glad I simplified this. I know this is probably the most complex topic, guys, in the class. Dark pool, are these supply demand zones? Yeah, basically. That's kind of the essence of it, algo, is, just finding those big inflection points to create supply and demand zones. And that's how, the stocks are going to travel, is back and forth to these zones. So, the way I do it is I find that inflection point, which gives me the entry, And then with supply and demand, we have a sense of where it could go. Susan, great question. For the NVIDIA trade on slide 70, you entered the bullish trade before it broke the cloud because you were confident in the pre-market news. Yep, Susan, awesome, awesome question. So let's actually go back here, team. So again, when we're trading at zones, guys, it's getting very tight risk reward. So because I had such a bullish bias on this stock, right? They were at CES event. They were launching new products. They gapped up a ton. So I thankfully got a little pullback here to my key zone. So yes, I did enter right at open. And I was about to risk back below this key zone because the way it should work is this support should hold. And now if it pops and stuffs the cloud, I'm probably getting out of that trade pretty early. But with the context here, Susan, you know, the fact that I actually got the pullback to that key zone to reload, I got in right away. And this move happened very fast. So this is a bit of an extreme example, but it just details, you know, if it hits one, it's going to go to the other. Sid, would they work as Fibonacci's? Yep. I don't use personally Fibonacci's, but you can definitely apply that, guys. Again, it's those, you know, key inflection points. JP, another great question. What time frame inflection points, daily, hourly, 4 hours, seem to be the most successful? So JP, they're daily ones. That's why, you know, I always start with a daily. Those are the big ones, or like I showed you on a video example. When those break, you get some killer moves. Now, you're not always going to be at major daily inflection points. So that's why I like to also have, you know, those filler levels that help us kind of get to the biggest ones. Paul, looks like some of these inflection points line up close to voodoo lines. I personally haven't used voodoo lines, guys, but another, you know, amazing tool from the Simpler family that you can combine. So it's just a method to the madness that I would truly wrap your head around. Rodney, great question. Can you speak on how premiums change in and around and in between zones? And have you trademarked no touchy? I haven't trademarked it, so it's probably gone by now. You guys are probably working under the radar to patent that. It's okay. But that's a great question, Rodney. The key with premiums, guys, is, again, in the middle, in the no touchy zone. Premiums are just going to kind of chop around. And that's why we want to make sure that we discipline ourselves to trade at inflection points, because something's going to happen. It's going to pop hard. It's going to drop hard. It's going to move. And that's what allows premium to move. And that's how we can, you know, almost double your money here in 2 minutes on NVIDIA, you know, make 150% on Google in a few minutes. It's because you're getting in when something should happen. Right? And again, doesn't mean something's always going to happen, but if you're playing in the middle of nowhere, you know, you're going to be a victim to premium, where if you wait for these inflection points, guys, that is how we leverage options. So I hope it's all slowly starting to make sense here. Definite maybe, if a trade you're in is just hanging out between zones, do you usually still close it out before market close? Yeah, you know, especially if it's not a swing trade, never let a day trade turn to a swing trade. You know, if you got a great entry at a zone and it's kind of, you know, slowing down in between, you could definitely get your piece, guys, and get out. Because again, it'll consolidate, it'll hit a cloud, it'll give you another little inflection point to keep capitalizing on it. So again, this whole system builds on itself. All right, guys, any other questions here? And again, guys, just for us, just for time, I can't really dig into some naked charts, but if you do the live trading with me, that is where I'll be able to, you know, show my prep for the day, show why I got these levels, show why we'll be playing off of them, and I'll be giving you guys access to my charts, you know, for those sessions. So not only you can use them, but go back and study them. So again, unfortunately, guys, just don't have enough time to mark up all these charts, but really go back and just understand this logic and then start to practice. Can do pivots approximate zones? Yeah, they can. Right, pivot points aren't personally part of my trading strategy, but it's very similar of just where did price truly turn and pivot. Paul, how far back in time do you limit the zone creation? So again, guys, you only want to go back to levels if you need them. So focus on what's coming next. JCV, do I mark this zone every day? So no, guys, the zones you mark, again, will usually stay. And thank you, Algo, I appreciate it. Best traders have the cleanest charts. And I have one of the cleanest you've ever seen. Thank you, my friend. And that's the key, guys, is really focus on the basics here. Supply and demand, all these wonderful things. Martin, with the last example in slide 72, let's take a peek. Great question. There was chop around POC. How do you decide entry exit here? Great question, my friend. So remember, guys, this is kind of no touchy zone. When we reach an inflection point, you can look to play it. So you could have played this dip buy off that 229 back up to point of control. So that's a great trade right here. And again, big old mess. So I would then look for, guys, is one, I probably wouldn't take this push off of point of control, but I would then take that zone breakout, looking to get to the next top of the zone. So great question there, because that really helps emphasize where to trade. Again, guys, you want to focus on getting entries at these inflection points, because that's what leads to a big pop, chop, 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 get the cannon effect, and then boom, another pop to that key zone. So great question there. Craig, are a few of your zone charts available to compare to our attempts to lay in zones? Yeah, guys, again, as promised, start to attempt zones and email me your charts and I will break them down and, help you guys. If I get a 500 charts, bear with me, but I do promise to give some feedback and help you guys, really start to learn this. 100 contracts. If a stock makes an all-time high during the day, it may have already moved half its ATR. Not sure how you were using that. More detail, please. So again, guys, ATR is just a compass. So again, for example, if we're trading, Google here and it breaks 2,300, that's all-time high. ATR is about 40 points off the top of my head. So again, it doesn't mean it's going to go to 2,340, but that's at least where I would be looking to play it for that day. And now if it stops at 2,320, that's now our next inflection point, 100 contracts. So again, at all-time high, guys, it's all about just ATR, and then you'll slowly be able to update your zone. And if you get that first inflection point through all-time high, let it fly. Mario, a little confused. That's okay, my friend. I know this is not the most simple thing of my system, and I hopefully preface that properly. So are you 1 and 5 minute trading only within the zones? So yeah, guys, and again, I'm going to break down how this all kind of ties back together, but you want to mark your key levels, right? You want to have your indicators, and then you want to go in on a 1 minute chart and start to execute around those inflection points. So bear with me, guys, and this will all start to come together. Audra, I like that. Hashtag always look left. Milo, do I use candle patterns or notice a specific candle, hanging man, shooting star, etc., for marking inflection points? Not necessarily. I mean, those candles, those patterns, a hanging man, a shooting star, those are going to give inflection points. So yeah, if we have a shooting star candle, I would focus on that wick, for example. Oh, there's 2 Milos in the chat. That's funny. All right, guys, so hopefully that helps here. I'll take a few more questions. Jerome Dan, there must be a way to construct these zones on smaller time frames with volume, right? Yeah, guys, you can use the bigger time frames or you can use, smaller time frames. So let me show you an example here on NVIDIA of a smaller time frame. So let me just zoom out here real quick. And I'll show you guys this chart that I was using this week. So if we look here, guys, these are very basic inflection points. So let me just clean this up and show you how I did this. Let me get rid of all this. And again, bear with me guys if there's a little mouse lag. That's why I'm trying to stay out of charts. So if we look intraday, guys, I'm just trying to focus on basic, inflection points here. So I look at the past day. We get a big drop, and we have our low of day. And then we also have a little, desperation pop. We also have that high here right at that low of day. So I now, guys, make this a little intraday zone. Let me do that better. An intraday zone that we can focus on. So again, if we extend that into this day, that's where we get this play. So now if we zoom in on Monday, whenever this was a bit of a choppy example, guys, but market gapped up strong, started to just pull back and chop. So again, kind of want to stay at a chop here. We're starting to recognize a ramp. And remember, we want to add pre-market highs to our inflection points. So, starts to ramp here and then finally starts to rip, go to our key zone, hit it, pull back to pre-market high. Another little pop here, guys, for a nice scalp right to the top of that zone. So again, you can use these little intraday levels, but I would try to combine the bigger key levels first. All right, guys, I'm gonna wrap up questions here because I know I could answer questions all day on this. And yep, Dana, making zones in the daily and then trading them, guys, in the smaller time frames. Greg, how long are zones valid moving forward? So usually, guys, if we hang around the same key level, a zone is valid until it becomes unvalid. So, if we just look at Google here, if it starts to break through 229, stop right here and get back above and just kind of wick through it, and it's no longer becoming valid, then I'll start to create a new zone. So again, you'll create your zones, see how price reacts at them, and then kind of go from there. All right, guys, I appreciate all of the questions here. And I know it's not the easiest concept, but I hope it can make some sense. So let's see, admin, should we take a break here or should I keep pushing? I forget what last our break was. I think we're an hour in. Break, please. All right. We'll do a break. So we'll do a quick 10-minute break, guys, and then the next sections will be a little bit quicker and easier. We're going to talk about, the prep process and kind of, work towards the end of the class here, team. So go enjoy a little 10-minute break. We will be back at, let's see, 3:40. 3:40 Central Time. Right? Yeah. All right, guys, I'll be back in 10 minutes. Appreciate you. All right, everybody, another break in the books. Hopefully we enjoyed. I had a little Chipotle, good to go. But reading the comments here, guys, and my middle name is Value, so I'm gonna make sure that after this entire class, I will actually do some, separate videos breaking down, a complete naked chart, showing you, how to mark some things up. So bear with me, guys, on that, but I do promise to provide, over the top value and make some of those videos for all of you to have. So just make sure internalize what we're saying now, and I will get you guys some of those videos that you can continue to learn from. Michael, food of the gods. But all right, team, we ready to dig back in here? We got our final few sections, and then that kind of wraps everything up. Oop. Give me 1 minute, guys. I just got rid of everything. My apologies. All right, awesome. You guys see my screen again? Should be good to go. All right, awesome. Back to work here. So next section, team, that we're going to dig into, I like to call it planning the trade and trading the plan. Let's get into it here. This is the section about the prep process and stock selection. We're going to take a deep dive into how to run your trading business. I'm going to lay out a repeatable preparation process that you can use to get ready for each and every session. What we're going to learn in this section is a breakdown of my personal prep process. We're going to talk about finding and interpreting certain news. We're going to talk about one of my favorite sayings called stacking catalysts. And then we're going to talk about narrowing your focus list coming into each session. Let's do it. So daily preparation process and creating a focus list. Prepping for each trading session, guys, should be systematic, meaning you should do the same thing every day, right? That's a good business, a good system. You don't want to be showing up lost, wondering, how do I get ready? You're going to have a complete system that you can do every day. The goal of prep is to identify the stocks that have the best setups, the best levels, which equal the best opportunity. We don't want to trade or look at names, guys, that don't offer much opportunity, that aren't near inflection points, et cetera, et cetera. Once you identify these stocks, it's extremely important to ignore everything else for the entire trading session. Come in with your list and refuse to watch anything else. Key point here, don't underestimate the power of focus. The trader who chases too many stocks capitalizes on none. We all know the saying, whoever chases 2 rabbits catches none. It's the same in trading. You will never catch every move. So make sure that you have a reason to be watching the stocks that you care about and focus on catching those moves. John said it best, an analogy. It's like a surfer. He knows he's not going to catch every wave, but he's happy with the waves he's catching. And he's also probably picking the right spot to go surf, which kind of is like us in our stock selection. So I personally recommend only watching a handful of stocks and really getting to know how they move, their price patterns, their behavior, their risk reward they offer. Options, guys, on certain names, they move a little bit different. Some names offer tremendous risk reward. Some options, not even worth playing. So really, I won't tell you guys which names to trade, but I do recommend having a handful of stocks that you mainly focus on. So if you just take a look at the picture on the screen, this is my personal watch list. I call it my war list. This is what I go to battle with every day. There's more names on this list, guys, but this is the top of it. I have ES, YM, and NQ. Those are the 3 indexes that you must follow. Below that, I have SPX, my favorite tool for executing on the markets. I watch Apple, Nvidia, Facebook, Google, Roku, Square, Tesla, Amazon. As you might see, I trade, big cap, tech stocks, chips. These are the names that I'm comfortable with, team, and they provide opportunity every day, left and right. So again, find your basket of stocks. I can help you guys pick that basket if needed, but I'm sure we all have our favorite stocks that we trade. Every stock offers opportunities. So again, find your favorite and ignore all else. If NVIDIA is doing something great, I better hit it. I don't care what Peloton is doing if it's not my focus. So new names, guys, can come and go on your list, but make sure, again, that you're hitting the best trades on your focus list, right? So if I show up today watching NVIDIA, Facebook, and Google, I better hit those trades and not concern myself with what's going on in Amazon. Hope that makes sense. My personal all reliables, again, are SPX, NVIDIA, Google, Roku. Those are just a few names, guys, that I personally can go to every day and find opportunity. I haven't done this, but you can, guys, generally build a trading career on one name. I actually have a friend who trades just Facebook. I have another friend who trades just NVIDIA. And now, yes, sometimes these stocks won't always be in play, but if you know how to scalp, there's always opportunity. So I recommend a little basket, but every session, these names offer massive opportunities. So there's really no need to look much further once you have your list. And I'll share with you guys my current watch list if you'd like it. So let's start to break down the prep process. And the biggest thing with the prep process, once you have your list of stocks, is start by just looking through the big picture, meaning zoom out, clear it up, and look at a daily chart. Because what you're going to notice, guys, is not every stock is in the best playable range, right? And that'll come just from visualizing and looking at charts. This is why we have a focus list, right? That's why I have that basket of, 10 to 20 stocks. You're going to go through each name and you'll find the stocks that are in a tradable range and that are offering the best edge. So if we look at, give me one second, guys, I lost my pen here. All right, there it is. If you look at the side example here on Apple, this is a hard range, guys. And again, if you remember the zone talk, there's really no big inflection points in here. It's kind of a big mess. But during this big mess, it's starting to form a nice little wedge. It was starting to come off some big key levels. When it breaks here, guys, this is when we want to have Apple on our focus list. So this is a tradable range. This you can still make money in, but it's just a lot harder. It's a bit of a mess. So again, I think the biggest thing is to just start on a big picture and recognize who is in a tradable range. So off the top of my head, right now a name like Amazon, it's been stuck in the same range for months. You can still trade it, but I rather trade stocks, guys, that are breaking ranges, breaking inflection points, giving us those better trades. So the next thing here, guys, after you look at the big picture and you kind of narrow it down, is you want to focus on finding and interpreting news, because news moves stocks. It's like gasoline on a fire. Excuse me. If you can find a stock with positive or negative news, these need to become a higher priority when you go into your trading session than a stock without any news. So for example, recently, Peloton with its recall, that is a huge downside catalyst that makes buying puts so much easier because it has a reason to just dump. Where a stock that just has nothing going on, you can still make money and trade it. But again, guys, if you can find news, that's that gasoline, that's that turbo on a car that just accelerates the move. It makes our job so much easier. News can cause volatile price action, which for us offers amazing opportunities, like shorting the crap out of Peloton. The key here, guys, is knowing where to find news fast, right? This is a game where you don't want to come in a week and be like, oh, guys, did you see Peloton recalled treadmills? You want to know the second they say they recalled treadmills so you can take advantage of it. So for me personally, guys, I use Twitter for news, and I've found that Twitter is king. I've used paid news services and I've used free news services such as Twitter. And honestly, Twitter is the fastest and most accurate thing for news. So you guys are going to get a slide deck included, and this is actually linked to a must-follow list of news accounts on Twitter. So if you click this list, and I'm not going to do it right now, it's going to pull up a list of a few Twitter accounts that I follow that'll have great news. They give you fast, immediate news. So go follow that list, guys. I personally turn on Twitter notifications So if you don't want that on, it is going to blow up your phone, but you can also just go through Twitter, guys, during the session and keep up with it. Another tool that you can use is called tweetdeck.com. So when you follow these names, you can use something called TweetDeck, which just helps you organize your news flow a little bit better. But this list is about five or six Twitter followers that are the best at reporting news, and that's all I follow. So here's an example of, stock moving news can include, we can get analyst upgrades and downgrades. So we take a look at Big Walt over here, one of my favorite followers. This is what the things he posts in the morning. So Google, Jefferies raises price target to 2,700 from 2,400. These are things that analysts do every week as they come out and they give their opinion. They either upgrade the stock or they downgrade the stock, raising their expected price that they want it to go to. So if I was a big firm and I came out that morning and was like, hey, I think Google's going to 3,000. It's super strong. That usually, guys, causes the stock to move. So you'll see here on this one tweet at 3:40 in the morning, as we prep for our session, you wake up and see this, Google got upgraded. Facebook got upgraded. Price target raised to 360 from 350. Twitter got their price target cut. So these are things, guys, that can, again, just influence stocks. Pinterest and Shopify expand a partnership to boost commerce globally. Guess what? You want to watch Pinterest and Shopify that day. Roku unveils new Roku Originals brand. You want to watch Roku that day. So again, we have analyst upgrades and downgrades. We have new products, features, and partnerships, company performance news. So sometimes a company will come out and say, it looks like we're going to do better than expected this quarter. That can make a stock explode. Vice versa, they can say, hey, we're looking like we're going to actually do a lot worse than we were. They have to come out and say things like that, and it can drop the stock. Antitrust, in the world of tech and, security, antitrust happens a lot. They go after Google, they go after Facebook, all these big tech companies. So news like that can often impact it. Things like quarterly earnings. So again, earnings can impact stocks. And also things like Federal Reserve meetings, which on this slide deck, guys, there's a link to the Federal Reserve calendar. And there's also a link here to an economic calendar where we get job reports, we get, inflation data. All these little things can spike the market. So for example here, just to show Thinkorswim again, on Friday, we had a jobs report. We had non-farm payroll, which you will see if you go look at that economic calendar. If you take a look here at the market, guys, right, we started to go crazy when that news hit at 8:30. And this was a bullish catalyst, which caused this huge acceleration for the day. So knowing when these events are coming, knowing how to interpret them will help you, decide what to watch and, the bias to kind of have. Where if, the Fed says something bad, we can drop. So these are the few, things, guys, that can impact stocks. And speaking of dropping stocks, this happened the other day, which again is why I think it's important to follow these Twitter accounts because you will get them in real time. At 1:39 Eastern, out of nowhere, Biden will propose raising marginal income tax rate to 39.6%, right? Raising taxes. Market does not like, and it just dumps. So these are things, guys, where you want to be aware of them. You don't want to, question, why are we dropping? Why are we dropping? That's wasted time. So it's as simple as just following these Twitter accounts and then watching their tweets because they come instantly. So these are the things that can impact stocks, guys. Right? NVIDIA looks fine. That morning, 8:08 before the market, the UK is set to intervene on one of their acquisitions that they're working on. So NVIDIA that closed at 635-ish, gap down to 610. Bad news. You get the morning pop for the cover, and then you short that crap all the way back down because it had news. These are the things, guys, you want to follow and pay attention to. So this leads into my favorite saying, guys, stacking catalysts. And the best way to narrow down your focus list is by stacking cats. That's what I like to call it, stack cats. And I'm not talking about these furry, cute little animals. I'm talking about stacking catalysts. And what that means, guys, is stacking reasons that a trade has a higher probability of moving over another, right? So stack them cats. Here's a stack setup. NVIDIA has a nice 1 hour squeeze. Point of control is above. It's right under an awesome inflection point in zone. It had a big price upgrade that morning. That's my main focus, right? I stack those cats. I have 1, 2, 3, 4, so many kitties. No cats. Apple sitting in a messy range. You know, it's 2 ATRs away from its best inflection point. There's no upgrades. There's no news. There's no reason to even watch it. Does that make sense, team? Let me know in the chat real quick. Type cats if this makes sense. Let's stack some cats in the chat. All right, awesome. So again, guys, this is a key where, you know, the funny cat term will help it stick. But just think, the more reasons that you can add on top of each other to take a trade or to watch a stock, that is price selection. So again, if you're waking up this morning and you're watching Apple and you can't tell me why, you don't have a cat. Oh, Chan, point of control's above on Roku. It just got upgraded with a great price target. You know, it's right at a big inflection point. That's a great setup, and that's something you should watch. So that's what stacking catalyst means here, team. 1 kitty, 2 kitty, 3. So let's recap the prep process and how to narrow down. You want to narrow down, guys, on, you know, a few stocks that you generally plan to focus on. This is your basket. So if I just show you guys real quick my basket here real quick. Let me find my Thinkorswim. So my Thinkorswim here, this is my basket. Let me just boom, boom, boom. These are what I focus on, team. So again, I have the market here: Apple, NVIDIA, Facebook, Google, Roku, Square, PayPal, Tesla, Shop. I won't read the whole list to you. But this is my list, guys. I don't really look much further than it. And being honest, I don't even trade half of the names on this list. The ones at the bottom are kind of backups. Where the top here, that's really where my focal point goes into. So I keep an eye on things like Airbnb, Zoom, Baidu, but those aren't the names I trade on a general basis. I focus on all of these names, but I do like to have a little variety. So you can see, guys, this is, you know, I won't count, but this looks like, you know, 20 stocks here. This is my basket, and I flip through them every weekend to see what's looking good. Let me get rid of that. Right, so narrow down your stocks to what you generally plan to focus on. This is your basket. Find about 10 to 15 names that move a lot, right? Have good ATR, have liquid options, and that you're comfortable trading. Each morning and night, start by flipping through your list and looking at the big picture to identify if a stock is in a playable range, right? You guys will just start to get a sense of this when you look at a chart and you combine the inflection point training, where it's like, wow, we're in a mess, right? There is no, you know, no good levels here. I'm just gonna wait. I'm gonna wait to touch that one. From there, start to identify your inflection points and start to create your trading zone. So again, we have our list of 10 to 15 names. We're kind of narrowing that down to the best looking ones on a daily chart. And then we're gonna start to dig in and mark up those charts. After we do that and we have our key levels, we want to check the economic calendar and the Federal Reserve calendar to see if there is any market moving events that are coming. So again, if it's Thursday, guys, and we're prepping and you don't know that there's an important jobs report in the morning, you are not going to be prepared to trade. This is preparation. So these things, looking at an economic calendar, it takes 2 minutes. But it's something that a lot of traders would just completely ignore. But we are not most traders, right? We're in simpler, we're elite. We have a prep process. So check these things, guys, and make sure you're aware of them, right? Is Powell speaking on Tuesday at 2? I want to know that. I don't want to be caught in a trade at 2 questioning what happened. Why did it dump? Why is it ripping against me? The more you know, team. Go into each trading session, here's the key, with 3 to 5 A+ setups that are near good key levels and have several catalysts, right? So we have our basket. We're recognizing the best range. We're narrowing it down and we're marking those charts up. We're doing a little diligence here to see any upcoming events, any news that might impact the stocks. And then for each session here, team, we want to come in with 3 to 5 that have those stat cats. That's where we want to watch for the day. So I might come into the day with Google, Square, and PayPal. That's all I'm going to care about because I've done my due diligence. I know why I'm trading them. I know the reasons. That's where your focus needs to be. Don't concern yourself with all the other stocks in the market. It's too much. So pretty simple, but powerful section here, guys. Any questions? I'll open it up. But what we learned is the breakdown of the prep process. Finding, interpreting news, good old stacking cats, and then finally just narrowing your focus list. So I'll do a quick Q&A here, guys, and we'll keep moving. I trade like an algo. Yeah, very systematic. We'll get to strike prices, John. That's the next section. Sylvia, how'd you get the ATR and POC in your watch list? So let me show you guys that. The point of control is a custom indicator that a friend made for me. So I unfortunately can't share that, guys, without permission. So unfortunately, just ignore that. But ATR here, if you go to this little, what's the word I'm looking for, gear, and you customize it, you can simply just search ATR and then add it. Make sure it's on daily, and that'll show you the stock's ATR. And I'll be giving you guys this watch list. So it'll be set up like this. Heather, yep. In the slide deck, you guys are going to get the link to the Fed calendar and the link to the economic calendar I use. Just to give you a little glimpse here, guys. This is what it actually looks like. So let me just pull up an empty browser real quick. So this is the economic calendar. This is from marketwatch.com. And what this shows us, guys, is, again, just the schedule for the week. So for last week, when we're looking at it, we have an ADP employment report. That was a big one. Everything else was kind of a non-event. If you look here on Friday, we had our non-farm payroll. That was another big event. So I can share with you guys the actual events you want to focus on. They're things like non-farm payroll, initial jobless claims, anytime the Fed speaks. Usually if it's pre-market, so before the market opens, these are Eastern times, it's important. So again, this is the MarketWatch calendar, and then you'll also be receiving, where is it? The Federal Reserve calendar. And this is where you can simply just scroll through and look for Uncle Powell. If Powell's speaking, we want to pay attention. Other than that, nothing really happens. So for example, this upcoming week, we want to see if we have anything. Looks like nothing, right? I'm really just looking for Powell. So those are the 2 links, guys, that you'll all receive. Let's see. Gator, appreciate you, man. Not bad, right? Drop out Beantown boy. I like that. Go Gators. JP for Twitter, do you just follow Walt Bloomberg and trade the news, or are there other ones you follow? So I'll show you guys the list. Again, you guys will get the link, but let me show you real quick just a few of the names actually on that list to help visualize it a little bit better. So if I just go to my Twitter real quick. Give me a minute, guys. I got to log in. Apologize. All right, my password's not working, so never mind there, team. But that link will drive you to a few of my favorite followers. And again, you just want to follow that list, turn on notifications, and you'll be good to go. Pete, West Coast market opens at 6:30 a.m. What do we do the night before, and what needs to wait until pre-market? Great question, Pete. So generally, guys, I do most of my prep at night. It's a little easier, especially if you're on, a different coast. You don't want to wake up super early. I get that. So what I do is I prep at night. So again, the same process. I get my key levels. I get all that stuff aligned and ready to go. And the morning is kind of like the refinement. see if there's any news. So if I wasn't watching Roku and I wake up to Roku news, I'm going to take a little deeper dive into Roku that morning. Because again, I want to have a stat catalyst list of about 1 to 5 before the open bell. So usually I have a sense of what I'm going to trade, but it gets refined in the morning. So for example, if I'm watching Google and I wake up and Google's upgraded, showtime. So morning is just kind of tweaking it. Let's see here, guys. Probably not a bunch of questions here. Cam, I'm going to be able to pay cash for that Bentley this year. My man. If you do, let's go for a ride. And yes, Audra, just an FYI, guys, these are great Twitter accounts, but you are going to get a lot of tweets. So again, you can turn on notifications. That's personally what I do. Or you can just scroll through it in the morning and kind of read it like a newspaper. So I personally recommend having a separate Twitter account where you just follow these news accounts so you can keep it, focused and cleaned up. But all right, guys, that seems easy enough. And Ray, for Twitter notifications, I use my phone. So literally, I wake up and I just read all the tweets like an old man in his newspaper. Sylvia, do you take into consideration how the overall market is trading, whether up or down, or just focus on your stocks? Absolutely, Sylvia. So you do want to look at the big picture of the market itself. I guess I didn't include that, so thank you for bringing it up. Not only, guys, don't look at the market, your individual names, but the market itself, because everything really stems from that. If the market looks like it's going to drop, usually so is everything else. So you get a sense of what's going on, but yeah, never fight the market. Old Carl. All right, guys, let's dig into the next section here because it'll answer a few questions I see in the chat. So we're going to talk about risk management. So in this section, guys, we're going to talk about a deep dive into how to think about and calculate risk management for each trade. And we're also going to go and break down which options that you want to play with and why. So I saw this question a lot, guys. What strike do I choose? You're about to get that answered. We're going to learn risk reward analysis. We're going to learn stop losses and profit targets, which we've talked about a lot here already. We're going to talk about the option contracts, which ones to select and why. And then we're going to talk about overall just managing your account. Let's get into it. So becoming a consistent trader comes down to how well you manage risk. I like to think of trading, guys, as we literally just have 2 jobs in trading. If I had to simplify it to 2 actions. 1 is to take great trades, and 2 is to manage our risk, right? So taking great trades comes down from our prep and our key levels, and then 2, we want to make sure we manage our risk. Discipline yourself to only take trades where your reward greatly outweighs your risk, right, guys? You don't want to take a trade where, if this works, I'll make a little, but man, if this goes against me, I am screwed. Why take it? We get to pick, right? I like to consider this game like a sniper. We show up, we pick when we want to enter. So make sure that your reward greatly outweighs your risk. And this is a probabilities game, team, where if you're just taking enough of these high reward, low risk setups, you're good to go. So low risk, high reward setups come when you trade at inflection points, right? It's slowly starting to build upon itself. If you take entries at major inflection points, you tremendously, I'm going to say it again, amazing word, raise your odds, guys, of catching significant moves while really limiting your downside risk. So this is what you want it to look like, guys. Let's look at this square example here. With scalping, you want tight technical stops below your inflection points, right? So we do our job of marking these inflection points, and then we do our job of getting in at them and controlling our risk. So again, big moves should occur at these inflection points. If they don't, get out. Right, guys? It's usually going to work. Not everything works 100% of the time. But if we control our risk and we control our discipline to trade at these levels, you're unlocking the game of trading. So if you look at Square here, team, this is the type of risk reward analysis that you want to focus on taking, where this is that example that we looked at a little bit earlier, if you remember. We had that key inflection point here. So when it's dropping to it, dropping to it, dropping to it, and bounces hard, that's a really nice entry. And this is what your risk profile looks like, where if it goes back below it, we're technically wrong, right? And when a stock, guys, drops all the way to a key level, it's usually going to pop. So it might have popped and went back below it. But as long as we wait, we get a good entry at a very big inflection point, this is what our risk looks like. So we're controlling very minimal risk while maintaining massive upside reward, right? Back to point of control, et cetera, et cetera. So really, guys, visualize this box as your risk reward analysis, where if you can take enough trades that have very minimal risk, right, and your reward looks like this, that is low risk, massively high reward. And that is how you build a consistent trading career. So let's keep moving with this. So again, with this Square example, we ran down to that major inflection point and bounced, giving us a key level and a tight risk reward setup. If you waited, team, right? This is why we want to try to trade around inflection points. If you got in here, our risk reward changes because technically the move is still valid, even if it comes back down here. But our risk is now a little skewed, where we don't know where we're wrong, right? That's why I want to focus on playing right at those points. Where again, if we get in here, super small risk, massive reward. But if we get in here, let me just clear this up real quick. Right, guys, this is technically our risk, and this is our reward. You don't want them to look very similar. You want them to look like this, with the gray being the reward and the risk being very minimal. So again, this comes because we're trading at inflection points. If you want a short point of control here, guess what, guys? You're wrong if it rips back above point of control. And your target is back down to that inflection point. So you have all this reward with such minimal risk, which allows you to run the numbers. Let's keep moving. So in this Google trade, we get all of our favorite tools together, giving us that strong inflection point that we've looked at multiple times in this example. This signals, guys, that entry with a tight stop back below, right? So when I'm looking at this chart and I'm trying to visualize my risk reward, this is my risk, right? I'm wrong if it goes back below here. However, if I'm right, I'm going to capitalize on all of this. That is the risk reward ratio that we want to focus on capturing and taking. And as it should, price held and continued towards the target zone. So again, guys, not every trade is going to work. And that's why we control two things in trading. We have two jobs: is take good trades when you should and manage your risk. So again, I don't care if this trade doesn't work. It fits my system. I'm controlling risk. I'm getting in when I should. And now I'll get out when I should, either for a stop or a massive gain. Right? This loss, guys, would probably be a 10 to 20% loss. Instead, it's 150% return. Those are the types of risk reward that you can accomplish with these inflection points, with stop losses, and profit targets with your zones. So keep your stops tight, guys, right under inflection points, and make your targets the next key zones and levels, right? Following that roadmap. If you take enough planned trades that have stacked catalysts and you're patient for inflection points that offer low risk and high reward, then you are on a path, my friends, to consistent day trading. You have to let probability work its magic. I have shown you guys my system. I have shown you all my indicators. The only way that this can go wrong is if you don't follow it, you don't control your risk, and you don't let probability play out. Right? If you take enough 1 minute cloud bounces, guys, on a strong stock, you're gonna win. But if you chase after, you're messing with your risk reward. I hope I'm making sense here. So moving on, guys, to how to select contracts, right? What options do we play? When it comes to selecting option contracts to play, this is my general criteria. So remember from the pointers in the beginning, I personally, guys, always focus on playing the same week expiration. So if it's Monday, I'm going to play options that expire on Friday. If it's Wednesday, I'm still going to play the options that expire on Friday. And even if it's Friday, I'm still going to play the same week expire. That's how I trade. And the reason, guys, is because these weekly contracts offer the most amount of volatility and movement in price, right? We don't want to buy an option that's not going to go up a lot. We want to capture these movements. It's the only way to, double, triple your money is by leveraging options. So you want to make sure you are playing weeklies. And yeah, Milo, the cheapo Fridays, I love it. So again, same week expiration. And I usually focus on trading slightly out of the money. So if you guys know how options work, if you're at the strike price itself, I like to be a little out of the money. And I focus on strikes that align with my zone targets and the stock's average true range. So those are really the two key components there. Let's keep working. So again, when it comes to selecting contracts, guys, I focus on strikes with the most liquidity and volume. And I'm explaining all the bullet points here, guys, and we're gonna, go over them again. So for example, on NVIDIA, we have our key zone that we broke down from prior. ATR of NVIDIA is about 20 points. All right, so we closed at about 580. What this is showing you guys is 20 points above. So that gets us right in the vicinity here of about 600, right? An average true range. So for the first strike that I'm going to focus on while we take this first little breakout is the 600 calls. Because again, that's slightly OTM, it fits my targets, and it fits the stock's average true range. And the reason, guys, why I'm going OTM is because they move the most and they give you a higher percent return. I know I'm going to get questions about Delta. I don't really care about Delta. I care about where the stock can go. Because if it gets there, with day trading, guys, you're going to make a lot of money. So I focus again on things that are realistic. So let's dig a little deeper into the options chain here. One thing that I really like to do, and this is a hack that I've kind of discovered, is I like to watch the volume on the option chain because big players often leave clues. So watch which strikes they're loading up on. So on your option chain on any platform, you can add a volume to it, like you see here. And so if we look at these strikes, big money, they get positioned in options that are out of the money, OTM, while it's cheap. And they sell it when it explodes, right? Like John says, feeding the ducks. We want to join them, team. We want to play them when they're cheap, take the explosion, and then get the hell out. These liquid options with the most volume become the best strikes to play. So look at Square here. This is after the market closed looking at the chain. If you look at the volume here, guys, pay attention. No one is really buying these 267.5 calls. There's 300 volume. Even on these 252.5s, there's only 900 volume traded on this option that day. But pay attention to the big ones that they are loading. We have 6,000 volume on the 250 calls. We got 2,500 here on the 255 calls. We have 4,000 here on the 260 calls. So for Square, I would look to play the 250s, the 255s, or the 260s, right? We're slightly OTM, slightly at the money. It fits Square's ATR for all of these to work in the money, and it has good liquidity. You don't want to play a strike team where nobody is trading it because they will manipulate the spread. They will not let you out because there's no one there to save you. When you're playing with a lot of players, those are the best options team. So pay attention to the volume on the strikes. You can get a sense also of risk reward by looking at what an OTM option would be worth if it starts to work at the money to in the money. So this is another great way, guys, of how I pick my options. So if we look at Square here, Square has an ATR of 13 points. In this example, it's currently trading at 256. So on an average normal day, it can make it towards 255. So if we look, keep building this example, the 255 calls are currently 2.8, right? The 255 calls, right, about 2.7, 2.8, if you take the mid and the bid. If we just look at a general rule here, and this is why I don't really use delta, if Square starts to make its ATR move, these can go from about 2.8 to about 7 or more, which if you do the math, guys, that's over 100% return. That's amazing risk reward. Because again, if we buy them here at 2 and Square actually makes that push, they'll now be worth what these are worth. So it's a very quick way to get a sense of risk reward when trading options. Where some contracts, guys, you're going to notice that, you know, an ATR away, if it actually runs an ATR, you'll make like 70 cents. Some options are priced really poorly and the risk reward is bad. But if I can buy the Square 260s here at $1.70 and we push towards 260, I'm going to flip those from, you know, $2 to $7, which is, you know, 200 to 300% return. So that's a little bit of, you know, the logic here of how I select strikes. And these rules apply, guys, both to the downside and buying puts, where, you know, if I want to buy puts at 230, we can drop an ATR and they're $1 and they can go to $6. I love that risk reward. So that being said, guys, there generally can be some fear around trading same-day expirations on options. And I truly want you to forget that fear. Forget whatever you've learned in the past and truly realize just how powerful those same-day expirations are. These days are my favorite. You know, Monday, everything's expensive. Come Wednesday, Thursday, Friday, things get cheap, guys, but as you'll learn, these are the best days. These same day expires, you know, the cheaper things get. This gives us an opportunity to not only size down, so allocate less risk per contract and take advantage of these cheapies that can absolutely explode. So this unlocks opportunities, guys, to attack your best setups with very minimal risk allocation, but very large upside earning potential. So for example, if you want to trade Google on a Monday, it's going to cost you about $1,500 to $3,000 a contract. On a Wednesday, you can capitalize on that same move for about $200 to $300 a contract, and it can go up hundreds of percent. So that is why I like to let things slowly start to get cheaper. The opportunity to catch hundreds and honestly, guys, even thousands of percent returns happens all the time on these same day expires, believe it or not. I know that might sound crazy, but I'm going to show you. So here's an example, guys, on Google, and just for, you know, context here, I did not take this trade. I'm just showing you the power of same day expirations. So on a basic example here of the things that we have learned, team, we hit a key zone, we pull back to 5-minute cloud and start to hold. We wait, we wait, we wait. Well, off of this bottom here and off of this breakout, the 2,300 calls on Google. So again, we want to focus on something that's out of the money and can be reached and also fits our key zone. So that all lined up. These calls, guys, went from 15 to 20 cents up to about $9 here at the high, which is about a 6,000% return. Now, again, I know this looks like something absolutely crazy, but this is how options move, where this is just a basic move for Google. But on Monday, it's not going to go up 6,000%. It's only going to do that days when it gets cheaper. So this is why, team, you know, you can buy something at 20 cents. You can invest, you know, $100 into this trade, and you're going to make 6,000% on $100. Do the math. You're making thousands of dollars, risking $100. That is why I love same day expiration. So whatever fear you might have had instilled, I want you to remove it and realize these cheapies are your best friends. Because remember, To play Google in the beginning of the week is going to cost you thousands of dollars. Well, instead, I could throw $100 in this and make a few thousand. Just following a basic move here, guys, leveraging options. Look at SPX here, another example. And again, I didn't take these trades, guys, but it's just to showcase what is possible. We get the we get a 5-minute cloud breakout, and we hold the ADMA all day. When we broke out, guys, they were about 90 cents to about $2 here, so about $200 of risk. And on this big push, while it holds all of the system that you just learned, right? Breaks the cloud, holds the 8, holds the 8, holds the 8, holds the 8, holds the 8. That guys went from 2 all the way up to 1,400%. 2 to 4 is a double, right? 2 to 6, 2 to 8. This is the madness and the magic behind these cheapies. That's why I like them, team. So remember, for overall account management, we have 2 jobs in trading. It's that simple. Take great trades and manage your risk. Right, guys, don't invest more than you can afford to lose. Don't chase. Don't trade stocks that aren't setting up well. All these things really matter. So make sure, guys, that you follow your plans and you follow your trading rules without hesitation. Try to become as close as you can to an unemotional robot. And it's not going to happen at first, guys, but just try that, right? If you can just follow your plans without hesitation, right? Breaks below, I'm out. Hits my target, block profits. Act like a robot. Harder said than done, but once you master your emotions, team, and you apply the system, you will unlock the real powers and opportunities. The only thing that ever gets in the way, unfortunately, is human emotions, which is why trading is a lifelong journey of mastery. And be ruthless when following your rules. Truly, be ruthless. Cut losses when you should. Don't question it. Cut it. Move on. Rip the Band-Aid off. Take your profit when you should. Don't get greedy. Follow the system. There's always more trades, guys. Be patient for inflection points. Right? Wait, then trade. Always respect your risk rules, right? Never take a trade where your risk reward is not favorable. Another thing, guys, is never oversize. Find an amount that you like to allocate and keep allocating that. So for very basic numbers here, if I take every trade with $100, don't come in and take a trade with $5,000. It's going to ruin your probability. Right? What if that's the one loser I take? I don't want it to be like that, guys. Run the numbers. So again, find your number and don't oversize. Slowly size up. Don't play and chop. Right, guys? That's a big thing. Don't play and chop. If you're not breaking levels, if you're just chopping, go enjoy life. And make sure, guys, you run the numbers and you let the system and probability work its magic. So that is the last section here, guys. That is everything, what we learned: risk reward analysis, stop loss and profit targets, option contract selection, and overall account management. So any questions here, guys, let me know. Lorna, great question. What percentage of your account do you allocate to each trade? If you have a $10,000 account, can you trade this strategy? Absolutely, guys. So if you have a $10,000 account, I would sincerely focus on taking trades in the 2 to 5% risk tolerance. So you're allocating, a few $100s per trade, right? You don't want to play with half of your account in one trade. You want to break it up, guys, and chunk it into, good little pieces that you can control. So I think, the 2 to 5, even 10% is pushing it. If you play in that range, guys, and again, you let probability play out, you'll be good to go. And yep, Ray D, avoiding chop is definitely difficult, but if you can avoid it, follow the rules, that's how you thrive. Agon, how do you use Active Trade to trade options? So if you guys did get, if you bought the class, you should have received the Active Trader bonus. I'll save the question, but I break down Active Trader, guys, in massive detail in that recording. So make sure you check that out. JP, another good question. Doesn't theta decay eat up profits if we trade 0 days to expiration? Someone say theta decay only kicks in during the last hour, but I don't think so. It seemed theta decay really kicked in starting halfway to the trading hour on Friday. My Tesla option was moving in the right direction, but it became a loser. I think it was due to theta decay. What do you think? Great question. And so the key, guys, is remember, we are scalping. We are taking advantage of very precise points and taking advantage of very, quick, explosive moves. So I don't really worry about theta decay. Now, if I'm holding a trade and it's working and it's starting to slow down and I'm starting to see premium start to, get beat up, I'll probably get out. But for most of the part, every trade you take, if it's at an inflection point, you're going to start to capitalize on it fairly quickly. Susan, what's your reason for trading with time versus a tick chart? So Susan, you don't want to use a tick chart because it'll just be, it'll just be madness. You want to focus on a 1 minute chart for being, the smallest time frame you use. Anything lower than that is just going to be absolutely insane. Rayon, can you show a bad trade you've taken recently? Yeah, of course. I got one right on the top of my head, fortunately. Let me pull it up here real quick. So here's a trade, guys, I took on PayPal that I had to stop out of. And again, it's all about just following your rules. Let me show you. So PayPal here, guys, had a nice little morning dip. I was very, very bullish. It popped nice and hard, and it hit the 1 minute cloud and came back to VWAP. Now, where I messed up a little bit on this trade is I didn't let it clear that cloud or clear that zone. I tried to buy the dip at VWAP. So it actually started to pop here, and I got in, and then it completely failed, and I got out. However, guys, that's why following your rules is important. You take that loss here, and then at the bottom, when it starts to bottom in reverse, it actually went up, 200, 300% on those options after it went to another key inflection point down below and held. So again, that's what a bad trade looks like, where technically, maybe I didn't follow all my rules because it wasn't above the cloud, but I did take a nice little VWAP bounce. I was just, again, a little too aggressive on it. And that's why, again, guys, human emotions often are the downfall of all of us. But there's always another trade. So be resilient and follow your rules. Chris, do you scale in and out or do you enter and exit all at once and then roll? Great question, Chris. So if you trade with size, guys, I recommend, managing your account at every key level. So if you get an entry and we start to pop and near another key level, when we get to that zone, I would lock some up. And then you can wait and see if it holds the 8 EMA and then continues through it. But a general rule of thumb there, Chris, is I like to manage my account, meaning, lock up profits, lock the whole trade, trim when we get to those key levels and zones. All right, so if I buy low and we get to, point of control, I'm going to take some risk off the table and then see what happens next. All right, let's see, guys. A few more questions here because I know I'm running over on time. I truly appreciate all of you guys. Milo, do I wait to trade until Tuesday for price and also let Monday play out to give a sense of what's possible for the week? No, Milo. I still take it. You can still take advantage, guys, of options on Monday. It is just that one day where it's going to be the most expensive. So not my favorite day by any means, but we actually get SPX 0 days on Monday. So there's always something. Charles, can you please elaborate about the live trading sessions and are we expected to do trades along with you? So Charles, no expectations, on your end. What you can expect from me is to lay out, the prep process, lay out the levels, lay out the game plan, and then I'll be trading live. If you simply just want to observe it and internalize the system, you can. If you want to play along with me, that's the whole point of it, is for me to kind of, hold your hand and we all take the same trades together. All right, guys, hold on. Tom, what is the smallest size you would trade with? In the promo webinar, I believe you mentioned even 1K. Yeah, Tom, I mean, to start this year, I grew a $300 account to almost $3,000. So you really don't need a lot of capital, team. You know, you just need to be patient. As I showed you, you could have waited till Friday to trade Google for $15 a contract, and it absolutely exploded. So there's really no limitations when it comes to capital. Thank you, David. I appreciate your kind comment. So I have one more section, guys. Admin, do we want to take a quick break, or the last section is pretty quick and straightforward? It's just a wrap up. But if you guys want to take a quick, 10-minute break, we can, or we can just bang this out real quick. All right, looks like no breaks. No breaks it is. Let's finish up here, team. So just want to talk about tying it all together, right? Everything we just shared and talked about, that's my system, team. But I want to talk about how can we, mentally think about tying this all together. So these are the quick slides, guys, I promise. And then we can go enjoy our weekend. So again, in this section, guys, we're going to cover how to tie everything together that we just learned. I'm going to summarize how each step of the system really just builds upon itself. This is a slide where you can go back and read it over and just kind of have your business plan laid out. So these are all the system parts that we broke down in detail today. The full indicators, right? Finding inflection points and zones, the prep process and creating your focus list, and then risk management and contract selection. That's how this class was broken down. This, guys, this is our, this is our business plan. This is how you should think about trading your business and system. Study, master, and apply all the indicators that you learned today. They can be used for execution, and they also can be used for planning out trade thesis, right? With point of control above, daily cloud below, you can use it, guys, to execute and plan trades. Remember to combine these indicators with zones to get super tight risk reward entries. During the intraday session, wait for these indicators to give you signals. Second point, find the most important inflection points on a daily chart and create your zones for your watch list. Build these bigger pictures, but also build some smaller zones with pre-market levels. And then important, only trade around these levels. And I promise, guys, zone building will get easier with practice. I've taught hundreds and hundreds of people this strategy. At first, they were a little confused, but now they build amazing zones and they're conquering the market, and you guys are next. Drill down on your prep process. Check your key levels. Check your important news. Follow those Twitter accounts. Stay up to date with what's going on. Know when the Fed's talking. Know the economic calendar. And stack those kitties. This is how you should think about it again, guys. Once you're prepared with a focus list and levels, start to figure out which strikes you want to play when those levels break. Remember, focus on slightly OTM most of the time and play strikes that fit your target levels in the stock's average true range. Show up to each session with a game plan. Work that game plan and focus on getting a little bit better each day. Finally, guys, rinse and repeat. So that is our conclusion here, team. And I got a few more bullet points, and then I'll open up to some final Q&A. But I want to give some, personal heart-to-heart advice moving forward. And before I do that, guys, thank you. Thank you from the bottom of my heart. It truly is an honor and a dream come true to be sharing my knowledge, guys, with Simpler. This truly is a big moment for me, and I thank you for being here. And so I'm going to leave you guys with some advice that over my years of trading, that if you follow, will help you become successful. So the first point here, focus on getting better daily. This is a game where you can make and lose a lot of money. Forget about the money, guys. Really become obsessed with growth, not about money. Focus on the process, taking great trades, managing your risk, learning from every action that you take, right? Was that entry good? Was that exit good? Review, review, review. This game is all about becoming the best trader that you can possibly be. And that starts with controlling your day-to-day actions and your mentality. So again, show up saying, I'm going to get a little bit better today. Not, I'm going to make $1,000. No, I'm going to take a great trade today. I'm going to manage my risk. That's how you get better, team. Second point here, guys, is be fearless, right? This isn't a game for the weak. Human emotions are the #1 thing that can hold you back in trading. I promise it'll get easier, guys, but trust the system, manage your risk, and just truly understand that this is a game of probabilities. So if you take each trade with a calculated game plan and you don't let emotions from the past carry over, you'll be good. Take one good trade at a time. And then finally, guys, patience is king. King, king, king. Understand the power and importance of patience. Do not try and scalp all day. Don't do it. I've tried it. It don't work. Even though we're day traders, we do not have to trade all day or even at all. Be picky, guys. You need one good trade a week, a month, a year to move the ball forward. Be picky and stack your cats. But with that being said, guys, that is the final conclusion of the class. And just a few, little housekeeping things here. If you guys would like to upgrade to the Pro and Elite package for the live trading days, the admins are going to post a link where you'll be able to do so. We're going to be having, those 2 live trading days for the Pro, and we're going to have an extra 2 for the Elite. And in these live trading sessions, guys, this is where you will see me run the business, together, right? We're going to prep together. I'm going to share my focus list. I'm going to share my levels. I'm going to share everything. We're going to do it together for either 2 days or 4 days. We're going to have a blast. So let's see here, guys. All that is, and boom, we made it, team. Long day, but hopefully enjoyed. So again, guys, thank you so much. Forever grateful for this. But yeah, guys, I'll sit around here for a Q&A. And thank you all so much for the comments. I really, really appreciate it. Yep, Heather, absolutely. So to share a chart, guys, all you want to do on Thinkorswim, if you're in your chart and you're marking it up, what you want to do is just click share here, Heather. And if you click share and click share again, it's going to give you a link. When you click share, it's going to copy it and you just simply paste it, send it to me, DM it to me, whatever you got to do, and I will review your charts. And I can actually, guys, mark them up and send them back to you, to go see, why did Chan add that to my chart? What's he doing? You guys are awesome. Thank you so much for the support. I put my full heart into this. So I'm really glad you guys found value. Thank you for investing in me. Martin, is crypto in your wheelhouse? I like crypto, but it's not a main focus for me. But always happy to talk crypto. Susan, thank you. And again, guys, a lot of the questions, were covered in the class. So just to save time, go back through it, team. You're all going to get the recording. So I show you, how to draw zones, what tools to use, etc. JD, for larger accounts and lot sizes, is there a rapid leg-in strategy given how fast these plays play out, or do you try to get a large lot all at once? JD, usually all at once. I don't usually like to scale into trades because it messes up the risk reward. Where again, I want to get my size at that inflection point and then slowly scale out. The problem with adding as you go is you're messing up your risk reward. Where if that second leg starts to go against you, it can ruin the whole trade. And awesome, guys. I love this feedback. I hope everyone's feeling empowered, walking away with a full system. And again, remember, I am here for you. Email me, call me, whatever you need to do, guys. I will hold your hand until this works. Hashtag StatCats. That'll be our little hashtag together. Let's see here, guys. Doesn't look like a ton of questions, so I'm just kind of catching up here. DPS, do you have instructions on how to set up Active Trader and Interactive Brokers? Couldn't find it online. I can look for you, my friend, because I actually have a buddy that trades in Interactive Brokers with it. So I'll talk to him and shoot me an email. Steven, I mentioned Friday with, a 10, 20K account, you should be able to walk away with a few thousand in profit. Please explain. So yeah, guys, with a larger account, everything just becomes relative. So if you're putting, 2,000 into a trade and it goes up, 150%, you're going to make a few thousand that day. So again, Steven, it's all just relative to, the numbers that you're playing with. So again, I would focus on the percents, the trades, etc., and you'll slowly be able to scale into it. Where, one day in my own trading, I hope to put $1 million one day into a scalp and then double that sucker and go buy a farm like John. Thank you guys. So many great comments. I would love to thank all of you individually, but I'll do a group thank you. And yeah, JD, if you're trading that large, my friend, we can definitely talk because sometimes you might not get filled all at once, but I got you there, man. All right, team. All right, guys. So with that being said, I'm going to wrap up here. I appreciate you spending, so much time with me on the weekend. To all the mothers out there and, even the fathers that raise children, have a wonderful Mother's Day. And again, guys, be patient with this strategy, really start to internalize the system. And I promise this is all you need to have a successful day trading career. Start with each section, truly internalize it, and we'll go from there. And again, team, you can follow me on Twitter at FocusChan, or you can email me at chandler@simplertrading. The admins will make sure that you have my information. And a shout out to all the admins here. Thank you for helping me make this class go so smooth. Yeah, Rick, right? I should do this for a living. But all right, team, be blessed. Thank you so, so much. I will talk to you guys in the live trading. And again, wherever you need me, you know where to find me. Thanks all. Be elite and get a little bit better.